For third quarter subscribers, and its forecast suggests the pandemic boom is starting to fade. Matt.
We are looking at futures that are pointing higher, that have moved higher in London, well, now only 0.1%, but they had been in the red minutes ago. DAX futures up 0.25%. CAC futures are doing the best, so expect to see the biggest gain in France of the three major European and UK equity indexes. Here you can see the FTSE straight out of the gate, little change, not a lot of size. We haven't seen any size really or direction indications in futures all morning in terms of the United Kingdom's benchmark index, but we have seen gains in European equity indexes. So if you see the FTSE moving higher, maybe we can guess that the continental indexes will move higher as well. Here you see the IBEX up 0.5% right now. The CAC 40 up right at the open 1/3%. So we see bigger green arrows there, although not huge moves to the upside. European markets still opening higher this morning. That in spite of new record daily virus cases in countries across the continent. That's as markets price in growing optimism about the progress of stimulus talks in Washington. Joining us now is Simon French, Panmure Gordon, chief economist. How important, Simon, are these stimulus talks in Washington to European investors? Because at first glance, it's a little odd that we would price that kind of optimism over COVID infections that are getting out of control.
Well, morning, Matt. I think we've been here, haven't we, for at least 3 months. And I think in terms of how European equity investors price the possibility of a deal before election date, I don't think it's hugely material apart from some very, very near-term volatility. The problem throughout this extended exercise is the economics community is very clear that the US economy needs further fiscal stimulus to support US households, US businesses. But unfortunately, this is all wrapped up in politics, isn't it? And trying to understand how a stimulus package is gathered and either the Democrats or the Republicans take the credit, that's the more challenging part of this story than understanding what fiscally the US economy requires.
Sticking with the fiscal theme, good morning to you, Simon, but pivoting to Europe, we saw the European Union issuing bonds yesterday to fund their job support schemes of various natures. This issuance was well oversubscribed. It's AAA rated. I wonder what that tells us about investors' attitudes, investors' expectations and hopes for what governments will do right now, for how governments will support their economies at this point.
Well, I think it tells you an awful lot about investors' expectation that we haven't really seen the economic fallout of COVID-19. We haven't seen that in terms of the spike in non-performing loans, the potential contagion through the European banking system of that, the rotation to service new patterns of demand as a result of consumer and business changes as a result of COVID-19. And therefore, what you talk about, that appetite for AAA, EU commissioned debt, that is simply symptomatic of real concern over what the medium-term growth profile is in the euro area, echoed by Christine Lagarde overnight in terms of her comments around the spike not just in infections but in hospitalization and the positive rate in Europe, meaning that forget a second wave, but a protracted wave of economic disruption is still to come, and therefore investors rotating into safe assets.
Is there much you think that Christine Lagarde can do? We're going to hear more from the ECB today. She says she's got more tools in her kit. Of course, I've never heard a central banker say anything other than that. Is it true?
It is true, Matt. I've been privileged to have these conversations with you over a number of years. I've been consistent in my theme that the constraints of monetary policy are not mathematical. That you can always go further negative. You can always buy more assets. Yes, there are diminishing marginal returns of that, but the constraints actually are political rather than mathematical. It is whether the entities of the Eurozone, the sovereign governments, are prepared to sanction that kind of activity. Now, I would say that she is right, Christine Lagarde, the rest of the world's central banks are right, that they have other tools that they can use in extremis, but they really would rather not, and there is unanimity across central banks. They would rather see the fiscal authorities take primacy and monetary authorities, at least in a low inflation environment, backstop that largesse.
Where do you think unemployment is going to get to when you look at the Eurozone, Simon, and the way that jobs have been protected in some places? Where do you think unemployment is going to get to? When do we see the peak in that story for Europe?
Yeah, so this is a fascinating, I think, experiment, albeit experiment with people's lives and people's livelihoods, of whether job protection schemes, a quite deep welfare net that we see in Europe vis-a-vis the US, is more effective in dealing with big industrial change that potentially comes from COVID-19. In terms of answering your question, I think as long as these jobless schemes continue with their existing levels of generosity across the Eurozone, actually a tick higher of between 1.5 to 2 percentage points in the overall unemployment rate is probably about right in terms of our expectations. The question, however, is whether those job support schemes will be sustained as the political pressure inevitably turns towards rotating people into servicing new patterns of demand and the inevitable creative destruction that comes from that.
How much longer can governments pay for these things, Simon? We had someone yesterday telling us it's really no problem as long as they're issuing issuing debt in their own currency, which I get, but in Europe, that's a little bit more of, it's a different issue than it is, say, for the UK and the US.
I think you get right to the heart of the point, which is when you have common issuance with at least at the very least ambiguity over who the long-term holder counterparty is of that debt, then it speaks actually to structural problems with the nature of monetary union and moves towards fiscal, greater common fiscal toolkit that were there prior to COVID. And therefore, you are right that the challenges of continuing to do debt issuance to manage to this stage, which is absolutely the right thing to do economically, brings to the fore the political problems that existed way before COVID-19 and will continue to challenge policymakers until they decide to bite the bullet ultimately with their electorate and explain what the next stage of monetary union, capital markets union actually entails in terms of their fiscal liabilities.
Simon, thanks very much. Stay with us. Simon French, Pamela Gordon, Chief Economist, is going to give us a little bit more of his time for the next conversation here on the European Market Open. Coming up is the subscriber party over. Netflix slumped in late trade after adding fewer new subscribers than expected. We will discuss that next. This is Bloomberg.
Welcome back to the European Open. We are currently 10 minutes into the trading session right now. Markets have turned back down, and we're looking at a FTSE off 0.3%. The CAC and the DAX doing not quite as bad, down 0.2%. Let's get the Bloomberg Business Flash. For that, we go back to London and Laura Wright. Laura?
Thanks, Matt. Nestlé says its outlook for revenue growth has improved as consumers turn to its brands during the pandemic. The world's largest food and beverage company is forecasting organic sales growth of about 3% this year. An increase in pet ownership is also driving sales of Nestlé's pet care products. Google is being sued by the US Justice Department for abusing its monopoly in search. It's seen as the most significant antitrust against an American company in decades. Google controls about 90% of the search market in the US, and the DOJ says that's, quote, an unchallenged gateway to the internet. The US is accusing Google of using exclusive deals to smother competition from rivals.
This case is deeply flawed and risks harming American consumers. We compete vigorously in the marketplace. Our industry, our sector, is marked by prices that are free or falling and rapid innovation, and those are really hallmarks of a competitive industry.
Goldman Sachs has sent some workers at its London office home. That's after 2 employees tested positive for COVID-19. These latest cases are a setback for the bank as it tries to return staff to its offices. Almost 30% of workers in the UK are back. In New York, about 30% are now rotating through the office. That's your Bloomberg Business Flash. Matt, Anna.
Thanks very much, Laura. Laura Wright here in London. Now, Netflix's latest results are adding to doubts that the streaming giant can maintain growth. It's missed estimates for subscribers, adding just 2.2 million in the third quarter. That's about 1 million, though, short of what analysts had expected. You can see in after hours the stock down by 5.7%. Simon French, Pamela Gordon, chief economist, also turning his thoughts to some of the stay-at-home stocks and some of those businesses that have benefited from these trends. Simon, it's interesting when you think about what the pandemic has done here, because in so many fields of life, pandemics, it's often said, can push us into the direction we were heading, but more quickly, increase the pace of change. Maybe that helped Netflix in the early days, but now it's also increasing the rate at which competitors are bringing out rival products, and maybe Netflix pays the price here in the stay-at-home market.
I think that's certainly right when you're looking at the profile of Netflix users, but the broader point you make about the stay-at-home economy is the initial surge was very counter-cyclical. As the wider economy was going into a deep recession, actually Netflix and equivalents that were consumed in greater volumes, and crucially, as other forms of consumption were depressed, suppressed, restricted, actually what you might now see is they're also counter-cyclical during the recovery. So you expect traditionally the technology, telecoms to be highly cyclical sectors. Paradoxically, investors need to get into the mindset that certainly on the exit from big COVID-19 restrictions, a lot of these top line growth that they have seen on the downturn is going to head in the opposite direction as we start to consume things, holidays, restaurants, entertainment that have been constrained during the last 6 to 9 months.
When do you expect, or when you look out at how the second wave is happening, how long do you expect it to go on, and when do you expect us to kind of come out of it?
Oh, what a question, Matt. Look, it's exceptionally hard for an economist to try and reinvent themselves as an epidemiologist. Many of my colleagues have. I'm going to not fall into the trap that you've set me there, other than to say that the pathway towards a vaccine, given the intensity of effort, does suggest that something that, if not 100% effective, makes a significant dent into the number, the scale of the vulnerable population that allows us to manage the disease better. That looks likely in the middle of next year, based on experts in that domain, not economists, but epidemiologists, scientists. And in that environment, then the economy can start to do what I was talking about before the break, which is rotate to new patterns of demand gradually and reduce the spike in unemployment that will happen if you take off those job retention protection schemes too quickly. It is that managed transition, aided by a vaccine, aided by medical interventions, that you're looking for to get the recovery underway.
And Simon, keeping in mind the disruption and the unprecedented uncertainty that the coronavirus has brought, those are the words of the Chancellor overnight. I want to go to a UK story which is interesting. Confirmation overnight from the Chancellor that the planned spending review that was going to be a 3-year project is now just going to be a 1-year project because of all of this uncertainty. What is the significance of that for somebody who has experience in government, working at the Treasury, Simon? What is the significance of reducing the time horizon over which the government is planning here?
Well, the significance is that departments that have had their budgets totally ripped up in fiscal year 2021 are only going to get a single year of visibility over their budgets rather than a 3-year window. So planning over the long term becomes impaired. Now, in normal times, you would say that's not a good approach to managing the public finances, but these are far from normal times. At 7 a.m. UK time this morning, we got borrowing data out in the UK, more than £200 billion of borrowing year to date. The debt burden now higher than any time since 1960. These are quite big figures, and given how quickly they have shifted, I think it's actually quite smart for the Chancellor, the Treasury, to actually say, look, we will take stock on a rolling 12-month basis until we have a little bit more clarity on what the sort of stable pathway is for both the economy and indeed the public health response.
How long until we pay the price for all of this debt, Simon?
Yeah, so I've been very vocal on this, that the UK, indeed all major economies, are under no immediate pressure, nor should they be, to pay the price. If we look at previous episodes where huge exogenous shocks, very disruptive shocks, you think of the world wars took place and public sectors took on, out of necessity, smart economics, leaning in against the weakness of private sector demand, took on big parts of debt. They don't pay them off quickly. They pay them off multi-generation, they issue long-dated debt, and they take advantage of the fact that certainly institutional appetite for long-dated debt is still very, very good. So I don't think we pay for it soon. I think more likely we'll get fiscal forward guidance from a lot of governments around the world saying we won't start fiscal tightening, repaying this debt until unemployment reaches a certain threshold.
All right, Simon, thanks so much for joining us this morning. Really appreciate your time. Simon French is Panmure Gordon's chief economist. He's going to be continuing the conversation with us on Bloomberg Radio at 9 a.m. UK time. So just about 40 minutes from now, you can switch over from the television to the radio. If you're in the city of London, listen to us on London DAB Digital. Anywhere else in the world, you can just Google us, or you can Bing Bloomberg Radio. I've never tried it, but I will later on to see if it actually works. Coming up, a roadblock to one of the biggest deals in tech. China starts throwing up opposition to NVIDIA's $40 billion purchase of ARM from SoftBank. That story next. This is Bloomberg.
Welcome back to the European Market Open. 21 minutes into a trading session that has increasingly been negative as we've gone through this morning, going down into negative territory, despite the futures picture that actually looked fairly buoyant. So it looks as if we're putting aside hopes for any stimulus in the US, at least for the moment, although US futures point to the upside. Here in Europe, it is consumer products, consumer discretionary products that seem to be moving us lower. That is the biggest falling sector. But let's talk about some of the movers to the upside. That is, these are countering the trend, if you like, this morning. Ericsson profits surging as as the Huawei ban offsets the pandemic hit. That is part of the story. They've also been awarded some contracts as well. The same story at Nokia in part. They've won a deal to supply Telia with 5G radio access networks in Finland. Randstad, also interesting. This is the temporary staffing business, of course. Third quarter gross margin beating estimates, and some analysts saying that in tough times, businesses may, Matt, turn to more flexible cost structures, and that could mean temporary staff.
All right, let's get more on that NVIDIA story. The planned acquisition of ARM may hit a roadblock. Bloomberg has learned that Chinese tech companies, including Huawei, are lobbying the country's regulators to either reject or impose conditions on the $40 billion deal. ARM's semiconductor designs and architecture are central to most electronics, from smartphones to supercomputers, and could become another pawn in the U.S.-China trade tussle, or maybe we should say have become another pawn in the U.S.-China trade tussle. Joining us now to discuss further is Edwin Chan, our tech editor based out of Hong Kong. So Edwin, what exactly is Huawei and these other countries really worried about?
I think at the end of the day, they want to ensure continued access to ARM technology, which, as you pointed out, are the fundamental building blocks of many of the world's electronics, everything from smartphones to high-powered supercomputers. I think they want to ensure that if Beijing's regulators pass this deal, that they will not lose access to that key essential technology.
Yes, and so indeed, and so that's why it matters, I suppose, whether ARM is owned by a Japanese business or by a US business. This is all part of the bigger picture tension between China and the United States at this point.
That's right. I think the tensions are playing a huge role in regulators' determination and review of this deal, which is the largest ever acquisition in history for the semiconductor industry. I think the fear amongst Huawei and its compatriots is that once it is owned by a U.S. company, that again, that ARM technology will be out of reach. Now ARM and NVIDIA would argue that it is not in their best interest to do so, and that really U.S. sanctions are pretty much global at this point. But again, you can see from Huawei's standpoint why they would be concerned.
So what does this mean for the deal, Edwin?
I think this, as you pointed out, is a significant roadblock. I think, there was always going to be problems getting approval in the U.S., EU, and the U.K., other jurisdictions where industry players may also raise similar objections. But I think the biggest obstacle may be China, which is not exactly a transparent process. So it'll be interesting to see how this plays out.
Yeah. Interesting to see then what the Chinese regulator decides its view will be, given China's consumption of these chips and the technology we're talking about here, Edwin. Also interesting to see what other regulators decide to do, and whether the UK government tries to put any conditions on the purchase by NVIDIA, whether they can do that and what those might be. Edwin, thank you very much. Edwin Chan, our tech editor based in Hong Kong. Matt, we've got European equity markets moving to the downside then as we go through the first 25 or so minutes of the European equity trading session. Only two sectors in positive territory right now. That's telecoms and banks. So a slightly defensive flavour perhaps to the top of that. Telecom, though, doing very well, and part of that is the Ericsson story.
Yeah, absolutely. Ericsson and Nokia both getting contracts from Telia. Ericsson posting a profit that's better than expected. Actually, earnings look pretty good today. Telia as well had profit that was not only better than expected, but better than the highest analyst estimate. So these concerns or this market downturn may be due to the bigger records of coronavirus, maybe due to more or less optimism, I should say, about a U.S. stimulus deal before the election. The ECB coming up, kicking off an event to assess its monetary policy, how its monetary policy is perceived. The ECB listens. Next, we're live in Frankfurt.
Welcome back to the European Market Open. 30 minutes into your trading session, things deteriorating, it would seem, in terms of the story for equities this morning. So half an hour into our trading session, and we're down 0.3% on the Stock 600. Part of that is what's happening in London. Not all, though. The FTSE 100 down 0.6. The Xetra DAX down 0.5%, though, as well. So it isn't just the rise of 0.5% on the pound that is taking the steam out of the FTSE 100. There are bigger stories at play here as well. So that's what we've got for you in terms of the markets. And as we discussed, as we were going to break, there are only a couple of sectors in positive territory this morning. So it's pretty broad-based, the selling that we're seeing across these European equity markets right now. Let's get to a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. The US may be edging closer to a stimulus deal. House Speaker Nancy Pelosi says she is hopeful an agreement can be reached this week. That time frame would be crucial for getting a bill passed by Election Day. But Senate Majority Leader Mitch McConnell is still warning the White House against pursuing a bigger deal. Pelosi told Bloomberg that progress is being made.
We all want to get an agreement because people need it, and it's urgent, and our economy needs it. We have one little bump in the road with the Appropriations Committee that is not sure they're going to be ready, but let's hope they are. We're starting to write the bill, and then we can have the negotiation. But I'm optimistic.
The US and the EU are heading for a clash over their preferred candidates to lead the World Trade Organization. Sources tell Bloomberg that Brussels is looking to support Nigeria's Ngozi Okonjo-Iweala, but observers believe the Trump administration is leaning toward the other candidate, South Korea's Yoon Myung-hee. The preference of other major economies is not clear. Saudi Arabia's crown prince is being sued in the US over the killing of journalist Jamal Khashoggi. Prince Mohammed bin Salman and 20 others are named in the complaint. Khashoggi was killed by Saudi agents in 2018. Crown Prince Mohammed denies any involvement but accepts responsibility as the country's de facto leader. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna, Matt.
Laura, thanks very much. Laura right there in London with your First Word News. Now, we are going to briefly show you live pictures of the ECB Listens event. It's being opened by Christine Lagarde and Philip Lane. There you see them. This is part of the central bank strategy review. More than 20 organizations will explain how they perceive European monetary policy. Joining us now out of Frankfurt is our ECB reporter, Carolyn Look. So, Carolyn, thanks for joining us on the program this morning. What can we expect to come out of today's ECB listening event?
Hi, Matt. Yeah, so today is really about the ECB listening to what representatives of civil society have to say on a number of issues related to its policy. As you know, the ECB has been pumping trillions of euros of stimulus into the euro area economy over the last few years. But at the same time, we haven't seen the significant gains in price growth that they've wanted. And all along the way, there have been these persistent questions over the effectiveness of its policy as well as the side effects. So, for example, what are the implications for inequality when the ECB is buying financial market assets, or what are the consequences for climate change when you're driving down the borrowing costs for big polluters? So that's what I expect today's discussion to be all about, but it's definitely too soon to expect any definitive answers.
Yeah, I remember pre-pandemic, Christine Lagarde and some of the others on the ECB seemed to be a little divided on their views around climate change and how much the ECB should take that into account. But, you know, things have changed fast, haven't they? Where does this leave the ECB then, Caroline, in terms of its overall strategy review?
I mean, it still has more than half a year to go, and there's a lot of issues that they haven't really touched on yet. So I think one area where we have heard quite a number of views from policymakers is on the inflation goal, which, as you'll recall, is currently below but close to 2%. And there seems to be a consensus crystallizing that this goal doesn't quite do the job for them, that they'll need something that centers more evenly, more symmetrically around 2%. But as I said, there's still a lot of time to go before any decision is due.
We have the next ECB meeting coming at the end of October. When is the next live meeting, so to speak, Carolyn? When's the next time economists expect real action from the central bank?
I mean, as far as I've seen, I haven't seen any calls for October to be, you know, a live meeting, as you say. Most economists are expecting any action, if at all, to come in December. And in a way, that also makes sense because, you know, you'll have the U.S. election behind us. We'll have new forecasts, which will, by the way, also include forecasts for 2023. So the ECB will just basically have a lot more information available on which to base its decision.
Thanks very much, Carolyn. Just looking at live pictures, we just saw Philip Lane there. We've seen Christine Lagarde, of course, listening, and these are the voices they are listening to. Thanks very much for joining us from Frankfurt. You can watch the whole of this ECB listening event. If you're a terminal subscriber, use Live Go. 35 minutes into Wednesday's trading session. Up next, the UN says more than 1 million species are at risk of extinction. But what is the cost? Barclays says biodiversity loss could cost $20 trillion a year. We'll discuss next with one of the authors of this new report. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open. 38 minutes into the session, we're looking at red arrows across European equity indexes with the FTSE off 0.5%. Let's get the Bloomberg Business Flash. For that, we go back to London and Laura Wright. Laura?
Thanks, Matt. Nestlé says its outlook for revenue growth has improved as consumers turn to its brands during the pandemic. The world's largest food and beverage company is forecasting organic sales growth of about 3% this year. An increase in pet ownership is also driving sales of Nestlé's pet care products. Netflix's latest results are adding to doubts that the streaming giant can maintain growth. It's missed estimates for subscribers, adding just 2.2 million in the third quarter. That's about a million short of what analysts expected. It follows Netflix's strongest first half of a year ever. The company has warned that the pandemic boom will not last. Snapchat surged more than 20% yesterday after quarterly revenue and user growth topped estimates. The company had previously warned the pandemic would curb revenue, with the company losing money from a lack of big movie launches. But the slowdowns never materialized. The lack of new TV and movies only meant more people turning to the app. That's your Bloomberg Business Flash. Matt, Anna.
Laura, thanks very much. Laura Wright here in London. Now, one of the many impacts of modern human society is the loss of biodiversity in nature, it seems. The UN estimates that 1 million of the Earth's 8 million species are facing the threat of extinction. And a new report from Barclays is warning that this decline could cost $20 trillion a year. Alongside risk management, Barclays argues that focusing on biodiversity as an investment theme will also raise significant opportunities. Let's discuss this with one of the authors of the report. I'm pleased to say Catherine Ogundia joins us now, equity research analyst at Barclays. Catherine, good to speak to you. So if we didn't have enough reasons to look after the planet, you presented us with some more. If you care about biodiversity, or if you think it's an investable theme, do you basically have to avoid palm oil, soy, cattle and timber, or are there ways to invest in those, just make sure they're sustainable?
Good morning. Thank you for having me on. You've raised a very good point. These commodities we highlight in the report as being important to focus on from a biodiversity perspective, but we by no means expect investors to move away to alternative commodities. Take, for instance, palm oil. If you were to move to an alternative oilseed, you would need 10 times the amount of land. So with increasing conservation concerns, it just simply wouldn't be feasible to expect such a shift. What we're seeing in our research is that the growing trends in the use of things such as certification, ensuring that supply chains are free from things such as illegal deforestation, is an important ways that investors should be looking at the biodiversity theme.
What else can investors do here? I mean, there's so many things you don't even think about, but what else can investors do to take advantage of a shift for consumer behavior?
Absolutely, good question. In our view, there are three ways that the theme of biodiversity can really be meaningful to the investment community. The first is simply addressing biodiversity as an additional risk factor, particularly for sectors that are aligned to the commodities that you've already mentioned, so things such as palm, soy, cattle, timber, and so forth. The other way has been really using biodiversity as a new additional ESG screening metric. We're increasingly seeing the companies that are sort of most sophisticated in terms of understanding these risks, disclosing, for instance, the amount of commodities that are sustainable and so forth. We're seeing even the likes of, say, Unilever investing its €1 billion Nature and Climate Fund, in which they're doing many things to, say, replant forests and so forth. And then lastly, we're seeing the investment community using the biodiversity theme to play into the broader natural capital theme and trend. And by this, we mean there are a number of technological advances that are helping us address some of these biodiversity issues and concerns. That can be, for instance, using satellite and drone technology to monitor a plantation and check and detect any sort of illegal or suspicious activity. And it's been very encouraging to see, say, some of the consumer brands investing and using these technologies to essentially make sure that they have comfort that their supply chains are free from some of these risks that I've alluded to.
How do you tackle, Catherine, when you get to the nuts and bolts of this, I suppose? How do you tackle the perception on the ground amongst the farmers who farm in this way that there are economic benefits that are gained from current practices? How do you get around that?
There are a number of ways of doing this. I think we're seeing more partnerships in terms of some of the food giants and even the food retailers really working with their farmers to help them understand that simple things such as correctly using chemicals and fertilizers isn't just positive from a biodiversity perspective, it reduces costs. We're seeing the use of precision farming, again, being a key driver and another investment opportunity arising out of this growing focus. But you're right, it's a very collaborative approach, but we are seeing increased partnerships between farmers and the corporates with whom they work.
Catherine, thanks so much for joining us. Fantastic. Oh, sorry, Anna, do you want to get in here?
I was just going to ask about specific companies, Catherine, either the companies themselves or the sectors that you think are taking this very seriously. And as you screen for businesses that are acting to protect biodiversity, what do you find?
Yes, happy to take you through that. So in terms of sectors, I think that's probably the best place to start. So within the paper and packaging area, there are a number of companies doing a number of different things to really think about looking after their forestries. But you can look out for things such as within, say, the paper and packaging company, the increased use of, say, recycled paper in the paper or cardboard that they are producing. The consumer goods area and even the HPC names, again, is an important sector to cover. And same with, say, the food retailers with links to, many of the commodities that we highlight in the report. But we speak to many of the companies that we cover really to work out exactly what they're doing. Because the topic is still relatively nascent, one of the things that's really important for the investment community to do is speak to the companies where they can, but also look at the increasing reporting in terms of initiatives from a biodiversity perspective.
Now I thank you, Catherine. Really a pleasure having you on the program. Appreciate your time this morning and your report. Catherine Ogundia, equity research analyst at Barclays, talking to us about the cost of the loss of biodiversity and the possible investment opportunities as a result of the reaction to that concern. Coming up today, we're going to ask the question on the MLive, or we have been asking it all morning on the MLive blog, when will the tax price in antitrust risk? If you think they haven't already, and if you think there is any antitrust risk, there are a lot of ways to look at this question. We're going to put it to Laura Cooper, Bloomberg's MLive macro strategist. Next, this is Bloomberg.
Good morning, everybody. As you can see, I just placed stop for two of my positions. We hold for euro against United States dollar at 118.567, and second position we had at 117.135. I put stop for both positions, so I'll sell them if the price will reach 118.05. Okay.
Welcome back to Bloomberg Markets. This is the European Open. We are 48 minutes into the session right now. We're looking at a mixed picture with the S&P futures higher. So if you're prepping for the Open on Wall Street, you still see a slight gain in futures. Meanwhile, European stocks have turned lower. You can see the stocks Europe 600 down 0.6%. Nancy Pelosi and Steve Mnuchin are moving closer to a stimulus deal this week that's crucial to getting a bill passed by Election Day, even as the Senate Majority Leader, Mitch McConnell, is reportedly warning the White House against a bigger deal, and has been, we know, for quite some time. Still, the House Speaker is hopeful a deal can be reached.
But I'm optimistic. It is, legislation is tough because you're coming from two different perspectives on it. But as long as we know that we want to keep the American people safe, that means, though, that we have to support our state and local, our first responders, our healthcare providers, our teachers, et cetera, that we have to depend on science to crush the virus. And we want to put money in the pockets of the American people so that they can have some confidence and spend in our consumer economy to inject demand and create jobs.
So take us through the process, if you could. You're in the room, we're not in the room. Yeah. What sort of language do you need to be able to say, yes, we think this will work? I assume you don't need the entire bill to be written. That takes some time. But what do you need to have reduced to writing so you know you have a meeting of the minds enough to say, yes, we can make this work?
Well, we are, again, things have different weight. But as I said, honor our heroes, crush the virus, money in the pockets of. And within those, we have to have more money for state and local because those are the people who meet our needs. They are getting fired, going on unemployment. That doesn't seem to make sense. So that's one place where we need more work. We have still some language that we have to deal with in terms of health, beyond the testing, tracing, treatment, mask, all that. We have to have better language, improve the language on healthcare providers as well as the vaccine, and it's within range. And then in terms of money in the pockets, we're still fighting for an earned income tax credit, child tax credit, refundability for the low-income family, working families in our country. As you have seen the statistics over the weekend, 6 to 8 million more people will fall into poverty because of COVID, and we think we should be investing in them. Economists tell us, help the neediest, they'll spend it first. So it's the right thing to do from a compassion standpoint, but it is also from an economic standpoint. And then we just have some differences within there. But now the two bookends of our differences right now, since you asked, one is state and local, and the other is liability, because safety in the workplace for us is not an issue. It's not a provision in a bill. It is a value. These families, many of them essential workers, go to work. If they don't even get unemployment insurance if they're concerned about going to work because they might catch the virus because the provisions haven't taken place. So again, safety in the workplace, very important. I'm hoping that we can come to terms on that. So those are the two bookends. In between, we have some differences. And of course, they don't want to do anything for elections. I'm very concerned about what they're doing on census. It's so unconstitutional, but again, we may have to live to fight another day on that. I don't know. They've said they have no movement on the census, which is in defiance of the Constitution of the United States, that every person in the country should be counted. The Supreme Court just ruled in favor of the president that he could stop counting people, but the Congress can change that, and that's what we hope to do.
That was US House Speaker Nancy Pelosi, of course, speaking to Bloomberg. Let me get some breaking news coming through on the Brexit front. We're hearing from Michel Barnier, of course. He's talking to the European Parliament. He's saying we'll continue to look for a deal until the last day. The deal must reflect a balanced compromise, is this new language coming through from the European Union. We'll leave the Brussels experts to interpret. But the EU's Barnier is saying he's ready to talk on the basis of legal texts with the UK. That's something we have heard this week perhaps in written form, but maybe the the first time he's saying it out loud. An agreement with the UK is within reach. Time is limited. We need progress in coming days, and this is having an impact on the pound. The pound had been leaning in a stronger direction for around the last hour or so, but now we see that intensifying, and certainly I'm looking at a euro-pound chart, session chart right now, and we see the pound doing very well there. Is the market expectation changing here, or have we been here before? Let's talk to Laura Cooper, Bloomberg's Markets Live macro strategist, who's with us. Laura, it takes a brave person to say, yes, this is it. This is really a moment where we make progress in one direction or another on the Brexit conversation. But certainly the pound is reacting. The pound is gaining strength this morning.
Well, the pound is gaining strength, as you mentioned. We are seeing cable back above that 130 handle, and today's comments really don't change this narrative that ultimately markets are expecting some kind of deal to be reached. So the self-imposed deadline that was meant to be for last Thursday was clearly redrawn, and so I think ultimately it's the end of the year, the end of the transition period that markets are focusing on, and the comments that we're seeing come out continue to underpin this expectation that we will see something come through that will avoid this kind of hard cliff edge exit from the UK, from the EU at the end of the year.
All right, very interesting moves there in the pound. It does help that the dollar is down against, well, every other currency right now with pretty serious size. Let me get to the question of the day on the MLive blog. When will the techs price in antitrust risks? And it doesn't look like they have yet, but I guess it depends how much you believe the risks are worth.
Well, it's quite interesting because I think, the question is, well, I'm not surprised really that investors are kind of taking this latest development in stride, because this is really can be thought of as kind of a slow-moving iceberg instead of kind of this sudden shock to markets. And it may ultimately not actually sink the ship because, if we look at the antitrust report yesterday, Alphabet stocks still gained for the day, and we actually saw the New York FANG index outperform U.S. peers. So I think at this point, investors are shrugging it off, and it's likely to be the case that, yes, tech is in the crosshairs of government regulations, but there's three crucial reasons for this outperformance likely to not be deterred too much. One is just the fact that, the breakup of these firms is actually, could take years. So investors are not going to price that in right now. And then obviously Chinese demand, yes.
Thank you very much, Laura Cooper, Bloomberg Markets Live macro strategist. Yes, our team in Brussels suggesting that we are seeing some interesting new language coming through here from Michel Barnier. We'll keep watching that through surveillance. This is Bloomberg.
I changed my stop and profit for euro. I put 3 positions at 118.62. Moving so fast. So you guys who follow my trades, it's right now 118.62. If it will go to 118.70, I will move to 118.65. So right now 62.
Stimulus twists and turns. Nancy Pelosi says she's hopeful for an agreement, but Mitch McConnell warns the White House not to rush into a deal before Election Day. Our markets and the political realities misalign. Winter worries. Christine Lagarde signals the ECB may need to do more, saying the resurgence of the pandemic before the coldest months is a key risk to the economic outlook. Tech headwinds. ARM may become the latest flashpoint in the U.S.-China tech trade war, while streaming giant Netflix misses subscriber estimates. Welcome to Surveillance. I'm Yusuf Gameneddin in Dubai. We've got a situation then where the House Speaker remains optimistic that there will be a pre-election stimulus deal. And as a result, you've got risk assets. They are firmly bid. A classical fiscal optimism play, according to Nomura. The state of play at the S&P 500 mini futures currently called substantively higher after, of course, the earnings picture continued to fill overnight, including from Netflix, which came through with a miss. Investors at the moment taking the latest Google lawsuit and the NVIDIA ARM uncertainty in stride. U.S. 10-year yields finally getting a little bit of movement then in the last few hours. We are at 81 bips. And the sell-off then really taking a little bit of momentum over the last few hours. The whole yield curve beyond 5 years is trading at 4 months highs. JGBs and Aussie bonds are also taking a hit. It's notable that the rise in bond yields is doing nothing to help the dollar, though. And on that currency note, you've got traders testing the Chinese government's tolerance for a strong yuan, a major move in the FX space this morning. It keeps rallying no matter what officials appear to be doing. We're at the strongest level since July of 2018. And then gold getting a lift as well, up 0.7%. Keep an eye on that trade, is what the billionaire hedge fund manager John Paulson is saying. Let's get to the Bloomberg First Word news for you as well to round out the picture with Leanne Garrans. Good morning, Leanne.
Good morning, Yusuf. Google is being sued by the U.S. Justice Department for abusing its monopoly in search. It is seen as the most significant antitrust action against an American company in decades. Google controls about 90% of the search market in the U.S., and the DOJ says that's, quote, an unchallenged gateway to the internet. The U.S. is accusing Google of using exclusive deals to smother competition from rivals.
We think this case is deeply flawed and risks harming American consumers. We compete vigorously in the marketplace. Our industry, our sector, is marked by prices that are free or falling and rapid innovation, and those are really hallmarks of a competitive industry.
The US and EU are heading for a clash over their preferred candidate to lead the World Trade Organization. Sources tell Bloomberg that Brussels is looking to support Nigeria's Ngozi Okonjo-Iweala, but observers believe the Trump administration is leaning towards the other candidate, South Korea's Yoon Myung-hee. The preference of the other major economies is not yet clear. Saudi Arabia's Crown Prince has been sued in the U.S. over the killing of journalist Jamal Khashoggi. Prince Mohammed bin Salman and 20 others are named in the complaint. Khashoggi was killed by Saudi agents in 2018. Crown Prince Mohammed denies any involvement but accepts.
Okay, we closed 3 long positions on euro. With some profit, I'll show you when broker will give me a report, and I'll show you how much on the screen, how much profit we made, okay?
Adding to at least 6 other deaths across the country yesterday. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Garrans. This is Bloomberg Yusuf.
Thank you very much for that update. Now, let's get to the U.S. because the country may be edging closer to a stimulus deal. The House Speaker Nancy Pelosi says she's hopeful that an agreement can be reached this week. That time frame would be crucial for getting a bill passed by the election day. But Senate Majority Leader Mitch McConnell has weighed in, and he's still warning the White House against pursuing a bigger deal. Pelosi told Bloomberg that progress is being made.
We all want to get an agreement because people need it, and it's urgent, and our economy needs it. We have one little bump in the road with the Appropriations Committee that is not sure they're going to be ready, but let's hope they are. We're starting to write the bill, and then we can have the negotiation. But I'm optimistic.
Joining us now is Seema Shah, Chief Strategist at Principal Global Investors. Seema, this back and forth is getting exhausting for investors. even though the market's pricing in a deal, I mean, may they be getting a little bit ahead of themselves? Are you on the same page?
Good morning. Yeah, I think I am on that same page. You know, I think despite that optimistic tone that it looks very unlikely to me that before the US election, we're going to see any stimulus package. Now, I think in terms of market expectations, they are also anticipating something at least within the next few months. And with that, I would agree. I think come January or February, the chances are that you will see a meaningful fiscal stimulus package. And I think that's what's keeping the sentiment pretty positive.
Are we at an early stage of a new cycle? So you're saying we're likely to get something substantive on the fiscal side in the United States, a new cycle basically where you have a generational pivot towards persistent fiscal stimulus after fiscal stimulus, already assisting stretched monetary policies?
I think that would have been the hope, that we would see that additional focus on fiscal policy, which is sustained. And certainly from central banks in the last few weeks, as they call for additional fiscal policy measures, I think what they're saying is that, look, they're running out of tools. They're up against the walls of effectiveness, and it's really time for government to take the baton. Now, unfortunately, we can't also ignore the levels of debt that have been run up across countries around the world. So, unfortunately, it will be really difficult for governments to keep introducing new fiscal stimulus deals. And I think what we're seeing in US Congress is just a blueprint for the kind of debates that we should anticipate going into 2021, not just in the US, but across Europe and other countries too.
I mean, for all the talk around uncertainty about the outcome of the US election, the VIX picture is very interesting. And we have, of course, the additional picture for our clients. This is a story of a current trade at the 29 handle. Your November and December VIX futures, they're roughly trading around there too. 2 weeks ago, the November VIX was at about 32. Are you also increasingly confident that we are going to get a clear result come November 3rd?
I think we may. I mean, look at the polls. The polls are giving us a clear indication of who's going to be in the White House. But I do think that there's greater uncertainty around the congressional elections. So who's going to be winning that Senate? At the moment, certainly the polls are suggesting that it would be a Democratic sweep, but it's a very, very small margin. So I think the chances of continued uncertainty post the November election, I think there's a fairly high chance of that. So I think investors need to really consider that. Now, having said that, actually our advice has been, ignore a lot of the election noise, because come January, February, the markets will forget about the election and they're going to return to focusing on the fundamentals that will drive them, which will be essentially the pandemic and central bank policy.
Seema, hold that thought. We still have a lot to talk about. A fascinating conversation. Seema Shah there from Principal Global Investor stays with us. Well, here's what is in the pipeline. Let's get you a bit of a snapshot. As the subscriber party over, Netflix slumped in late trade after adding fewer new subscribers than expected. We're going to break that down next, and the higher tensions between the U.S. and China around the NVIDIA ARM deal as well. This is Bloomberg.
is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Yusuf Gamenedine in Dubai. Again, the developing story of trying to contain the coronavirus in the United Kingdom. Now, a line coming through the UK's South Yorkshire region is going to enter the highest virus level. So that is going to be a key development to factor in to the coming hours as we try and get a better picture of.
Okay, I hope you understand. Yes, everything. So we had 3 positions, long positions. First position we opened quite a while ago, about a week ago, probably at 118.84, 119.84, then 118.567, then 117.135. We opened at lower and lower level. When it changed direction, we closed position at 118.62. And total profit from all 3 positions, as you can see, I tried to write down everything for you. Total profit, we have £3,180. So if you want to learn and see how we trade it, you can get the strategy. It's on the screen. And you can do the same things basically from your home or from your office. Okay?
TV and movies only meant more people were turning to the app. And that's your Bloomberg Business Flash. Yusuf.
Thank you very much. Let's talk about Netflix. The latest results then are adding to doubts that the streaming giant can maintain growth. It's missed estimates for subscribers, adding just 2.2 million in the third quarter. That's about 1 million short of what analysts were expecting, and it follows Netflix's strongest first half of a year ever. The company has warned the pandemic boom won't last. Well, still with us is Seema Shah from Principal Global Investors. Seema, quite a few key angles to the tech story at this very moment, but let me get an initial reaction from you on these Netflix. And are adding to doubts that the streaming.
I think that this is, what we're seeing is that for big tech, given the incredible performance that they've had this year, and actually not just this year, but even going back the past decade, is that you have earnings expectations extremely high. So it is getting more and more difficult for tech firms to meet these high expectations. Now, having said that, some of the larger ones, such as the Apples of this world and Google, they continue to do well. So I think we have got continued confidence in the mega cap space. But of course, it doesn't mean that they're completely bulletproof.
What about this latest move from U.S. regulators to try and rein in what they describe as monopolistic practices by Google? I mean, is this an inflection point, perhaps, and a bit of a reminder that what we saw with IBM and Microsoft decades prior could play out here?
Well, I think this is largely been anticipated by markets. So I think we've known for a few weeks that there was going to be some kind of antitrust move against Google within the coming weeks. So I think that's not new. The thing that has, I think, maybe taken markets by slight surprise is that it seems like Congress and generally the various administrations are upping the ante against big tech. Now, as I said, the big tech sector is not bulletproof, and then one of the key threats to the long-term performance is going to be regulation, taxation, all the things that Congress can move against them. But having said that, we are measuring this in terms of years, not months. So I think the near-term future is still pretty solid for mega cap tech, but certainly there is a threat hanging over them.
There's a fascinating column written this morning on the Bloomberg titled "Everything's Too Expensive and Nothing Can Be Done." What are you telling clients in terms of adjusting their portfolios?
Well, look, it's such an interesting article. What I found is what we've been thinking about more and more over the last couple of weeks is that it's almost as if the market just doesn't care about either fundamentals or valuations. Valuations are extremely stretched. The fundamentals, there's a considerable disconnect between the valuations, of course,
and the underlying fundamentals of the economy. Now, what does that mean for investors and how they should position? Well, look, we still focus. We think that there is an economic recovery. We think it's going to be long, it's going to be protracted. There will inevitably be potholes, but we do think that it's still there. At the same time, we know that central banks, who have been the main drivers of markets over the last 6 months, they're still standing behind markets. There is a huge wall of liquidity still helping capital markets. So with that in mind, we do think that a correction is unlikely at this stage. So it means still risk on. Given that uncertain environment, you need to have some kind of defensive positioning. We still like the mega cap tech. As I said, for the next couple of quarters, it should be relatively safe.
We see how that plays out. Seema, I always enjoy having you on the program. Thank you for your time. That's Seema Shah, Chief Strategist at Principal Global Investors. Well, we're just getting warmed up. Coming up, Anna Edwards is going to be speaking to the UK Business Minister, Nadeem Zahawi. That's next. From Dubai and the rest of the world, this is Bloomberg.
You're watching Bloomberg Surveillance. I'm Anna Edwards, live in London. The British Prime Minister Boris Johnson will impose the UK's tightest, or England's tightest, coronavirus restrictions on Greater Manchester. That's after talks with local officials broke down. And Boris Johnson warned that lives would be at risk if the government failed to act. The Prime Minister also left open the prospect of a national lockdown if infection rates keep climbing, though he says he doesn't want to do that. Within the last few minutes, South Yorkshire has also been moved into the highest tier for England. Lots to talk about then, this and also Brexit latest news lines. I'm pleased to welcome to the programme Nadhim Zahawi, UK Business Minister and Conservative MP. Nadhim Zahawi, thank you very much for joining us. If I could start on the subject of the virus, because we've had plenty of news lines around that. Can you confirm the formula that the government is using to try and reach settlements with regional leaders? Is that formula working?
Well, it certainly is in Liverpool City region, and I pay tribute to Steve Rotherham, who is the City region's mayor, Dan Jarvis today, as you've just been reporting, in South Yorkshire, as well as others. And I hope that we can agree with Greater Manchester that we can provide the 60 million that's on offer to them. The allocation of funding is based on if firms are asked to close, then 2/3 of wages for those people who are asked to stay at home will be paid by the government. Businesses can also claim up to £3,000 if they are asked to close as well per month. So it's a big package. We're already at £200 billion of wrapping our arms around the economy, as the Prime Minister quite rightly reminds us, and counting. You've seen some of the borrowing numbers today. So we're putting in an incredible amount of money, equivalent to countries like France and Spain and Italy and others.
Okay, can I ask you, do you think there's any need to increase the amount of funding to businesses in Tier 2, though, in particular the ones in hospitality, where they're not forced to close, but their demand levels have been hit hugely by moving into Tier 2? Is there something coming for Tier 2 businesses?
Well, look, we obviously have already made provision, because the new scheme that will come into place to replace the furlough scheme, which comes to the end of at the end of this month, will effectively allow businesses to keep their people part-time if trade is reduced because of the interventions we're making, where the government will pay 1/3 of the salaries, and the employee obviously then pays 1/3, and then it will be topped up by universal credit. So a single person living in a one-bedroom flat on national living wage would see pretty much 90% of their wages come through still.
So is there no plan at this point to increase funding to Tier 2 or to change the funding terms around Tier 3?
Well, I think the funding terms around Tier 3 have been accepted by, as I said, Steve Rotherham in Liverpool City region, and Dan Jarvis in Sheffield City region, and other areas. It's a very big package of help for businesses, for employees and employers. And we review all of our interventions. And when we entered this pandemic in March, we introduced the furlough scheme. We then listened to business and we extended it till the end of October. We made it more flexible. We introduced the coronavirus business interruption scheme, and then introduced the larger one for businesses that were sort of falling between the gap of the scheme from the Bank of England and the C-bill scheme, CL bills as it's called. So we continually review our interventions in the economy, and we want to make sure that we get them right. And I talk to businesses every single day.
On that subject, yes. Let me ask you about Brexit, because we're hearing lines this morning from Michel Barnier. He's speaking just earlier this hour, speaking and talking a lot about compromising, talking about the need for a balanced compromise, referencing the sovereignty of the UK. I wonder if this is the language that the UK government is looking for to take the conversation further on Brexit.
Well, Well, I haven't yet seen Michel Barnier's comments, but from what I'm hearing from you, it sounds incredibly positive that he's talking about the sovereignty of the United Kingdom, and we have always entered these negotiations on the prerequisite, which is only fair and right, that we are treated as a sovereign and that we negotiate as a independent sovereign nation. We wanted a Canada-style deal, which we think is doable, and our door remains ajar, as Michael Gove said over the weekend, to further listen to the EU and what they have to say on this. The difficulty we had, which is why the Prime Minister was right to ask, as I am now doing on your programme, for us to start or accelerate, I should say, preparations with business for the 1st January. It's only 75 days or so left now. Is because we can't keep business hanging on, and on the 1st January, we're going to be out of the single market and the customs union.
Yeah, a lot to prepare for. Thank you so much. I'm sorry we're up against a break, but thank you very much, Business Minister for the UK and Conservative MP Nadeem Zahawi. This is Surveillance. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Welcome to Bloomberg ETF IQ Europe. I'm Danny Berger. Over the next 30 minutes, we'll be your guide to the region's thriving market in exchange-traded funds. Everything you need to know about the funds and the flows. $460 billion of inflows. We'll ask if the U.S. ETF market's bumper growth will continue, regardless of whether there's a Democrat or Republican in the White House next year. The next big thing, 95% of institutional investors say the fixed income market is ready for the quant treatment. We'll discuss a new way to buy bonds. And if you're sick of the presidential race, how about taking a gamble on the growth of sports betting? We'll look at some of the new thematic ETFs vying for your money. Welcome to ETF IQ, everyone. First, let's take a look at which countries and sectors have been attracting the most money. Sebastian Solik has the details with FFLO Go. Good morning, Seb.
Hi, Danny. Do you know what? It's been a pretty good month for European ETFs, more than $1 billion of inflows. Let me run you through exactly where that's coming. We start in the UK, which takes the lion's share, about $700 million worth. This is a Brexit play, isn't it? We've seen a lot happen in the Brexit story over the last month, not least weighing on sterling. How do you trade the sterling in equities? You buy exporters, and that's what we're seeing ETF traders do, and that's really what has taken the majority of this. Switzerland will just gloss over. You get those quirks, don't you, with UBS money moving inside, showing up here, which takes us to Italy. Italy, if we talked about it a few years or a few months ago, then we would have had a very difficult time. You had political risk, didn't you? You had economic risk as well. All of that has gone away. It's not the world's worst performer in terms of virus handling anymore. In fact, in European terms, looking pretty good, which takes us to the downside. Speaking about handling the virus, Germany, not looking so good at the moment. We're at record highs in terms of numbers, in terms of daily cases. So we're seeing money coming out in terms of ETFs, $175 million worth this past month, Danny.
Wow, more than $1 billion worth of inflows. That's a lot. Thanks, Sebastian Solik. Now, joining us to discuss those flows this morning is Howie Lee, head of ETFs at Legal & General Investment Management. Howie, first off, thanks so much for joining us. Now, one of the things that really stuck out in what Seb just showed us was this continued inflows into European tracking ETFs despite the coronavirus concerns. What is behind these unrelenting flows we're seeing?
Yeah, thanks, Danny, and good morning. What we're seeing is a continued growth in the ETF market. Now, bearing in mind, ETFs are made up of equities, fixed income, and other types of investments. And certainly in the first half of the year, we continue to see flows into fixed income. Last year, about $40 billion worth of European flows was into fixed income. This year, that continued about $30 billion right up until September. I think around September, we started to see risk on back into the market where equities absolutely picked up. But there's certainly some trends to be seen here because, out of these flows that we're seeing, 50% of the European net new assets are actually coming from ESG-related ETFs. And certainly that is a new record. And even on the launches that we see, 12 of the 20 new launches are indeed, of the largest ones are indeed ESG-related.
Howie, that's pretty remarkable because I feel like a lot of times when you get crises, financial crises, or in this case, a health crisis as well, sometimes ESG kind of gets thrown to the side. Why is this year the year for ESG strategies, especially here in Europe?
Yeah, you know what? I think it's really because of how investors are, one, being asked by clients to really consider the environmental, social, and governance, all under the umbrella of responsible investing. So I think that's one driver. There's also a regulatory driver that are essentially asking for asset owners to think and invest responsibly. So when you have this dual kind of pressure between regulations as well as investors wanting to move their investments into ESG-related investments, that is really going to make a difference. All of a sudden, we're not just talking about asset allocation movements here. We're talking about asset allocation movements for multi-asset investors, as well as reallocations from, let's say, non-ESG building blocks to new building blocks.
Well, with those ESG investments, surely, as you say, regulation is a big mover here, but I'm wondering how the things are actually constructed. For example, this year, one industry group, the Investment Association, said that a third of FTSE 100 companies weren't reporting gender statistics. How do you even build an ESG ETF if there are these sorts of gaps in data?
Yeah, it's a great question. I think where we are at the moment is that ETFs and actually the investment community needs better data. Now, ESG data is improving. every single year, every single month, and really there's a bit of a race to really get the ESG data complete. Now we're probably going to reach that within the next kind of couple of years, but as we get more and more data, that gives investment managers like ourselves more information to be able to build and construct investment strategies with precision as to exactly what we want the outcome for that ESG to be. But we also shouldn't forget the importance of an asset manager's role in, when managing these investments, also to be actively engaging with these companies to essentially encourage better behavior from companies. So I think that's why investment stewardship is extremely important.
Both the human and the data angle, they're important for ESG. Howie Lee from Legal and General Investment Management stays with us. Now, coming up, with nearly $17 trillion of global debt already yielding below zero, what's left in fixed income? 95% of big investors reckon quant strategies could be the next big thing. We'll bring you that story next. This is Bloomberg. This is Bloomberg ETF IQ Europe, everything you need to know about the funds and the flows. I'm Danny Berger. Now let's talk fixed income and a new hunting ground for quants. With nearly $17 trillion of global debt already yielding below zero, investors are keen on new products for their money. According to Invesco's annual survey, 95% of institutional investors now say they think factor investing can be applied to the world of fixed income. Let's get more details with Sam Potter, who runs our ETF coverage from Bloomberg News. Sam, good morning. Look, factors are already really popular in the equity world. Tell us why this matters in terms of fixed income for the world of ETFs.
Good morning, Danny. Well, it matters for two key reasons. The first is how these large institutions, these big investors, choose to get their exposure. The second is the scale that we're talking about here. So also in this survey, we saw that there is a growing use of ETFs for these investors to deploy in fixed income and deploy factors as well. Most institutions now use factor ETFs, it found, and it said that 14% of their factor portfolios are in ETFs. For wholesale investors, it's more like 50% of their portfolios in ETFs. Now, in terms of scale, This is a survey of investors, of institutions with more than $25 trillion in play. So as you can imagine, any growth there, any increase in allocations towards factor strategies in bonds is likely to find some of this at least is going to find its way into ETFs, and that could lead to more of a boom into the smart beta fixed income funds.
Well, speaking of a boom in ETFs, the boom in bond ETFs in general, Sam, it seems to have gotten a lot of flack over the past couple weeks and months. A lot of research out there saying that the growth in them could be storing up trouble. What are some of these academics saying?
It's the fear that has always dogged bond ETFs, in fact. Simply put, they're taking not very liquid assets, like many bonds are, putting them in a very liquid wrapper, which is what an ETF is, causes a mismatch that can leave investors potentially trapped in any market shock. Now, fresh research from a PhD candidate in the Swiss Finance Institute has taken a look at this. And he wasn't looking for issues so much, but he did find that increased ETF ownership of a bond or passive ownership causes bond liquidity characteristics to be similar. So bonds behave the same way. And the upshot of that is, in a sell-off, in any kind of liquidity shock, more people could potentially be trapped in more assets.
Right. Sam, thank you so much, our very own ETF czar for Bloomberg News. Thanks. And now we're back with Howie Lee from Elgin. Howie, Sam talks about this dual concern of both crowding into bond ETFs and some of the liquidity issues. Are those concerns you also share about these products?
I probably don't share the concerns in the same way. We certainly get questions from investors. A lot of people think, ETFs won't be able to handle bonds. But actually, if you look back to what happened already this year, bond ETFs did exactly what they were supposed to do. They remained liquid. They remained tradable. Now, at that moment in time, around March and April time, spreads did widen. But actually, what people realized during that time was the spreads of the bonds widened just as the underlying bonds themselves widened. So the Bank of International Settlements actually came out and wrote a paper after doing some research to analyze what happened there. And they did highlight the fact that what bond ETFs did do is essentially reflect the pricing and gave it actually almost a leading indicator of bond pricing real time to investors. And so bond ETFs can continue to essentially give exposure to the underlying bonds in a diversified manner through a single trade. Now, that being said, I think it is a responsibility of issuers to make sure whatever they put into a bond ETF indeed remains liquid. So investment design is going to be very important.
But Howie, how attractive or how much does the story of attractiveness for bond ETFs depend on the Fed support?
I mean, the Fed support buying into bonds this year has obviously made a lot of headlines. Now, if you look at the scale of it, it's actually quite small compared to what's actually trading in the exchange. I think up until the end of September, the Fed had only reported to have bought about $9 billion worth of bond ETFs in the U.S. A lot of these were indeed U.S. listed ETFs themselves. So technically, it's not really going to move the market. But what it does do is actually highlight to investors that this is an access route that is easy to invest and liquid and also diversified. So if anything,
right. Well, we certainly do see more types of investors in bond ETFs. Howie Lee from Legal and General Investment Management stays with us. Now, coming up, fancy taking a gamble on the growth of sports betting and online gaming? Well, there's an ETF for that. Plus, we'll discuss the race for the White House and what it means for investors. That's all next. This is Bloomberg.
change is the defining issue of our time. So we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
This is Bloomberg ETF IQ Europe. Everything you need to know about the funds and the flows. I'm Danny Berger. It's less than 2 weeks until the U.S. election, and the country's ETFs have had a strong year so far, taking in more than $460 billion. That's an organic growth rate of 9.4%. But what difference will the outcome of the election make to investors? Bloomberg Intelligence says government policies and regulations may have some influence, but ETF's strong value proposition will remain the key driver of industry expansion. Total assets under management have risen steadily under every presidency dating back to the 1990s. Still with us, Howie Lee from Elgin. Howie, one question I think that's important to pose with any how do you position around election conversation is, does it make sense to do it with ETFs, to use these more broad-based indices when it's really a binary outcome?
Yeah, absolutely. I mean, ETFs themselves are extremely flexible tools, whether they're for tactical positions or long-term strategic ones. So if an investor is looking to essentially play the market and invest using ETFs to see what the outcome of the election will be, there are absolutely building blocks in both equities and fixed income that investors can use.
So if investors are using them to prepare, Howie, how are they using them? What exactly are they buying? And what do you recommend that they buy to prepare?
Yeah, I mean, the thing with recommending funds to buy, in for an election is that we're not going to know the outcome. I almost would encourage investors to think about some of the certainties beyond the election. We know whether it's Trump or whether it's Biden that's going to win that. We're still going to have some issues as it relates to U.S.-China relations, a vaccine coming likely at some point in 2021, but also who's going to take the global tech leadership, again, whether it's the U.S. or whether it's somewhere in China. Those are the kind of issues that I encourage investors to think about because those are long-term and we can actually position portfolios to align for growth that way.
Yeah, that tech story, especially with regulation, really interesting one to watch. Now, we'll get more with Howie Lee shortly, but let's first take a pause and dig into one of the exchange-traded funds you may not have heard of. Here's Sebastian Solik with this week's There's an ETF for That. Hi, Seb.
Hi, Danny. This one goes out to all of those who missed out on those 3 percentage-digit stock surges in the likes of DraftKings and other sports betting companies. Turns out there's an ETF for that. It's called BETS, and it's a passive way to play what is a growing industry. The creator of it says that there may be opportunities in Europe similar to what we saw over in the US, that because lots of them, he says, are very cheaply priced. There are stocks like Kindred, which is over in Malta, which is part of this ETF, 37 in total, by the way, which are not very well known, but are key players within this ecosystem. And so as that ecosystem grows, those fundamental parts of it will grow as well. If we flip it over, I can show you how this ETF has done since it debuted way back on June the 4th. Not bad at all, 36% of gains. You see the white line there, that against the S&P, which is around 10% in the orange line. So outplaying the market. The question is there, would you bet, Danny, on a betting company?
Betting on betting, that's definitely some sort of leveraged gambling bet. Bloomberg Sebastian Solik, thank you. Now, still with us, we have Howie Lee from Legal in General. Howie, ETFs, like Seb was explaining, and really all these thematic ETFs have had this explosive growth in Europe. Why? What accounts for that? Why is this year the year of thematics in Europe?
I think why it's grown so much is that asset allocation has increasingly looked to thematics to essentially give them that long-term return. If you look at why themes are created in the first place, we are actually trying to put growth into portfolio, regardless of the economic cycle, regardless of the elections. This is actually targeting structural shifts in our society. And now sport betting, of course, is something that's becoming a lot more popular as people spend time at home. But there are many other themes like e-commerce or energy storage, which we know that actually as humans and a society, we are changing and we are going towards online commerce and we're going towards a greener energy future.
Howie, if you're going to bet on structural shifts, surely the coronavirus must really be in the fore. Are there any themes that are more attractive to you now with the pandemic?
Yeah, it's a great question. I mean, we get a lot of questions from clients around cybersecurity, robotics and automation and AI, just because with more people spending time at home, they're experiencing these issues. Automation, because it makes things more efficient. Cybersecurity, because they're always online. But actually, I think what's been really popular this year is very much around e-commerce. The experience that people have had during lockdown meant that they are ordering things more online and getting them delivered to their doors. And this is really challenging that industry of logistics, of essentially getting.
Okay, ladies and gentlemen, I am placing a new order to sell short euro at 118.55. Okay, order placed to sell short at 118.55.
AI and e-commerce. When you put them into an ETF, how do you make sure that it's a very pure play bet and you're not, say, getting basically the same exposure as you would if you bought a NASDAQ 100 ETF?
Yeah, it's a very important consideration for anyone designing thematic ETFs. For us at Legal & General, our approach is to always work with dedicated experts in those areas to understand how that new kind of ecosystem is working. Because you can't just type in e-commerce and find a whole classification of companies, that way. You actually have to do on-the-ground research to understand those companies and use those data sets from data experts in order to compile a strategy. So for us, it's actually trying to define and classify, what makes up e-commerce. And here we've got fulfillment companies, we've got warehouses, and we've got last mile delivery. We then need to understand what companies are listed which participate in those markets and generate revenues from them. And then we put them all together in a consolidated basket so that your investors, through one investment, can have a diversified exposure to the growth of opportunity around e-commerce logistics. So that is how purity from an investment comes as it relates to thematic investing.
That sounds like a lot of work that goes behind the scenes in compiling that ETF. Are you worried, though, about more or less copycat ETFs? For example, you have the Robo ETF, invests in robotics, but shortly after you debuted it, iShares comes out with a similar version. Is this an issue in the industry?
I think you can kind of see it as flattering. You identify a theme as the first to market, and then another one comes into the market slightly different. What we always encourage investors to do is understand how the investment was built. Is it something, like I mentioned before, was it built through a very rigid investment process, which some people call active research and transparent implementation, or was it built by some other means? We always tell investors to essentially lift the lid, take a look at the companies that the ETF actually holds, and make sure that you're getting some pure plays in there. One of the concerns and dangers would be to opening up that lid and realizing that you're over-concentrating into companies that you may already hold in other parts of your portfolio.
So is the play here, you said it's structural shifts. Is there any scope for maybe using market timing with these thematic ETFs?
There certainly is. I mean, we certainly don't design these products to essentially focus on timing because, again, this is about a long-term growth theme. So using e-commerce as an example, we know that the e-commerce logistics market is forecasted to grow on a compound annual growth rate of close to 12% a year. That is really the target that we're going for the next kind of 5 to 10 years. And actually, our job is to make sure that over that period of time, there is some consistent growth. This year, we're obviously seeing much stronger performance in that. And for us, it is just making sure that we continue to pick the companies together with our experts to put it into the portfolio so investors can have exposure to a very diversified way of essentially playing the growth in e-commerce.
Right. Well, diversity, the name of the game, certainly in a volatile year like this. Thank you so much for your time today. Howie Lee, head of ETFs at Legal and General Investment Management. That's it for this week's Bloomberg ETF IQ Europe. We'll be back with more next Wednesday when we're on earlier than usual at 8:30 a.m. London time. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
This morning, an adjustment as yields break out higher, the dollar substantially weaker. It is not if, but when for United States billions of stimulus. Mnuchin and Pelosi, speaking of stimulus, they find clarity in common ground. McConnell finds the making of law at, quote, some point. The president, with impatience, says Republicans, they will agree with me. In 13 days and counting, Biden and Trump and Biden, tomorrow, they will see the Nashville skyline. Good morning, everyone. Bloomberg Surveillance from New York, from London. Anna Edwards in for Francine. And finally, Anna, the vaunted yield breakout Lisa Abramowitz has predicted since time began. We get a higher yield, lower prices, even sterling advances today against the dollar.
Yeah, absolutely. Sterling advancing. That's a different theme, isn't it, Tom? We'll cover all of these, but the story behind sterling is essentially around optimism, around a trade deal. I feel I've said that before. I feel we've been here before on Brexit talks, but we'll continue to monitor.
I mean, we're going to monitor all day. The news flow, folks, extraordinary. Of course, Kevin Cirilli ready to travel to Nashville for that debate that is tomorrow with all sorts of news overnight in the United States and, frankly, around the world. People looking at the markets. Just one data point we'll talk about in a moment. Renminbi out to new strength. Right now in New York City with our First Word News, here's Ritika Gupta.
Morning, Tom. Anna. House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin are moving closer to a deal on a new stimulus package. Pelosi hopes she can get an agreement this week. That's crucial to getting a bill passed by Election Day. One problem, Senate Republican leader Mitch McConnell is warning the White House against a Pelosi-led deal before November the 3rd. He hasn't committed to a pre-election vote. And President Donald Trump's campaign burned through almost half of its cash in September. The money shortfall comes at a time when the president remains behind Joe Biden in the polls. His campaign cut back on advertising in some key battleground states for a while. That Justice Department antitrust lawsuit against Google may just be the start of it. The case is expected to be followed by more state suits. The Justice Department action is the most significant antitrust case against an American company in 2 decades. Google's accused of a variety of anti-competitive practices. The company calls the government's case deeply flawed. British Prime Minister Boris Johnson will impose the UK's tightest coronavirus restrictions on Greater Manchester. Talks with local officials broke down, and Johnson warned that lives would be at risk if the government failed to act. The Prime Minister also left open the prospect of a national lockdown if infection rates keep climbing. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Anna, Tom.
Ritika, thanks so much. Equities, bonds, currencies, commodities. We're not going to bury you with a lengthy data check here. We're going to do them throughout the day as the markets move. Not so much in equities. Futures are -8. Dow futures -62. Out of stick in the VIX, 30.44. That does get my attention. It is in bonds where you've got news, and it's real simple. An adjustment in the 10-year yield, 0.83 was seen earlier, 0.8142. We're watching that carefully. That's a backup in yield by 3 basis points. The price move has been 1.8% lower price in the 10-year yield since the peaks of a number of months ago. I'm going to leave it at that. I know Anna's got so much more. Anna, just simply dollar weaker.
Yeah, absolutely. Dollar weaker. And you add to that some interesting news around the pound. And so it doesn't take much for the pound to go higher. So 130.41 we trade on cable. But the pound is also moving against the euro. So there is some pound news flow as well as the dollar weakness story. And the pound news flow is around the lines, the language being used by Michel Barnier, the chief negotiator for the EU, around Brexit. It looks as if he's pushing on some of those right buttons to try and unlock some further negotiation. We will see if that happens. European stocks falling here, though, Tom, this hour, down by 1.2% as we cling to all of the latest news lines around stimulus. And just to show that it isn't all about that same conversation, Ericsson up by 6.7% in the telecom equipment space. Profits there, and it just shows how Huawei's loss can be another business's gain, essentially.
Very good. Right now we start strong in this hour. Valentin Marinov joins us with Credit Agricole, head of G10 FX Research, but with decades of experience of defining support and resistance. Valentin, off the good Bloomberg Dollar Index, which is actually a really nice set of mathematics with a nice emerging market balance, we are at dollar support. Do you forecast a breaching where we do see finally weaker dollar?
Well, we do see finally weaker dollar, but we would personally wait for the outcome of the U.S. presidential election. What the price action feels at the moment is really foreboding what lies ahead for the dollar if indeed we have that blue wave, the Democrats gaining control over the Congress and the presidency in 3 weeks' time or so. And I guess the markets may be tempted to preempt that or indeed.
New position open for euro. It's short position at 118.55.
I do believe that the downtrend in the dollar is here to stay, could indeed continue.
Anna from Queen Victoria Street emails in Valentin and says, I got to make some money, Tom, fast for Halloween candy shopping. Can you figure out what big figure move I need? Valentin, am I going to get a big figure move of dollar versus euro or dollar versus yen?
I would think euro may be the better option there. I mean, to be honest, I'm puzzled at the moment why the dollar is so weak against the yen, because you've highlighted the moves in the treasury yield at the long end of the curve, the bear steepening of the treasury yield curve. These are all positives for dollar yen. So if anything, if I want to sell the dollar from here, that'll be against the euro, all risk-correlated currencies rather than the Japanese yen.
I'm glad you got my memo, Tom. Valentin, good morning to you. How crowded, are dollar weakness trades at this point, Valentin? Because it seems to be a theme that many people see the logic to.
Yeah, indeed. I mean, it's the case that some people are already on it. I mean, we mentioned euro-dollar. If you look at the risk reversals market, investors are indeed targeting even greater moves towards 125, 130 over the longer term. I wouldn't describe it as a crowded trade, but definitely there has been some persistent interest. Dollar CNH has been breaking through the lows on a persistent basis, and whereas some of that may be just structural in terms of exporters converting their revenues back into renminbi, I guess some part of that is speculative, with investors just expecting for the dollar weakness ahead. So I think some chunk of that dollar weakness to come is already priced in, and that may indeed warrant some cautiousness. We really have to wait and see who emerges as winner after the elections, really. So that'll be the near-term view.
Yeah, is the dollar paying attention to the conversations taking place between Democrats and Republicans at this point around stimulus pre-election, or is the dollar fixated on longer-term themes?
Well, that's the thing. I think that the main pivot at the moment is the impact on risk appetite from the discussions, and by implication on the dollar. Essentially, the dollar is seen as the ultimate safe haven. However, I think that that's somewhat simplistic, especially if we do see treasury yields heading higher and the curve there steepening from here. So I wouldn't be selling the dollar here against the yen. Actually, I'll be buying dollar yen, expecting a breakthrough, potential breakthrough, really in those discussions on the fiscal stimulus. Apart from that, I think dollar CNH is interesting. It seems like CNH is now viewed as sort of a high-yielding safe haven alternative to the dollar even, and that is shaping, actually taking shape and form. And to a similar degree down the road, that will be the story for euro-dollar as well, I think.
Valentin, in commodities, in stocks, in foreign exchange, what part of the bond market do you look at right now? What part of the curve or what spread market matters to you?
Well, from our point of view on the FX side, we certainly look at the relative slopes of the curve. 210 in particular have the highest explanatory power if you run it in a regression analysis, and this is the part of the curve, or indeed the slope between those 2 points, that is the most impactful for the markets, the one we monitor. If anything, also worth highlighting, real yields are very, very important for us as well. There's no denying that most of the dollar sell-off since March correlates like 1-for-1 with, say, 5-year break-even inflation, or indeed 5-year real yield. And that is another important variable to monitor, really, for the outlook for the dollar.
Okay, I was going to do this later when I wake up and I've stretched out. I've done my Jeremy Either and I've got my triceps going. We're going to do it right now. Give me full screen on this, Tanya, if you would. Okay, folks, you got the nominal yield. And then you got some form of inflation measurement, 5-year break even, as Valentin mentions, and that this minus this gives you the real yield. Valentin, what's so important is in the United States, the 5-year break even is just broken out to a new higher level. Is that persistent, and will that continue?
Well, part of the story is really the expectation that the Fed will maintain a fairly dovish, really policy outlook, which will keep real yields in the U.S. at close to record lows, or potentially push them lower still. I think that I think the argument is valid, and indeed is a reason to expect the dollar to weaken over the next 6 to 12 months. However, in the near term, the Fed has clearly signaled that it's really up to the politicians really to help the economy. It's really a matter of fiscal rather than monetary stimulus. So I believe that it may be a tad premature to really be playing that particular story right now. I think it's a longer-term negative for the dollar. The really extremely low real yields in the U.S. and the flat treasury yield curve. But in the near term, actually, as what we're dealing with at the moment, is actually bear steepening of the curve, which is counterintuitive given the dollar weakness we are seeing. At some point, the dollar should benefit from that.
Right. Valentin Marinov with us. Just perfect to have him with us with the markets on the move. Futures -7 and the yield we're watching 3 basis points 10-year, a breakout to a higher level, 0.8125. 1.05. I'll get the percent move here. We've seen, again, the bond price, the note price rather, the 10-year yield down about 1.8% from the recent months' peak pricing and low yield. This is going to be fun over the next couple days. Coming up on Bloomberg Markets, the former chairman of the Federal Reserve System, Janet Yellen, the other day, just on fire about the need for fiscal stimulus. Alan Greenspan at 1 p.m. Stay with us. Anna Edwards in London. I'm Tom Keene in New York. This is Bloomberg. Good morning.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Is it your expectation to do this another 5, 10, 15 years?
It's like Whole Foods is my daughter, and I literally married my daughter off to the richest man in the world. I just kind of came along to make sure the marriage settled in well.
I haven't yet seen Michel Barnier's
Stop on profit for euro at 118.53.
only fair and right that we are treated as a sovereign and that we negotiate as a independent sovereign nation. And I hope that we can agree with Greater Manchester that we can provide the 60 million that's on offer to them. We're already at 200 billion pounds of wrapping our arms around the economy, as the Prime Minister quite rightly reminds us.
That was Nadine Zahawi, UK Business Secretary, speaking to me earlier on this morning on a range of themes. And Valentin Marino of Credit Agricole is still with us. One of the things we talked about there, Valentin, was getting a UK government response to language we've heard from Brussels early on this morning. So Brussels saying this morning via Michel Barnier, talking about how the UK is a sovereign nation, talking about achieving a balanced compromise. It did sound as if, and we heard this from Nadine Zahawi, who called it incredibly positive, that this was perhaps the kind of language that could unlock some further talks. Was that your sense?
Well, indeed, it certainly will make it easier for Boris Johnson and his government to sell the deal, whatever the deal is, at home, because that was really the point about Brexit reclaiming sovereignty. And from that point of view, I think that may be indeed the right approach, something that will get us a deal in the end.
And so that lifted the pound. Michel Barnier's comments lifted the pound initially, and in fact the pound had already been on the rise so far this morning, Valentin. So how much stronger do we get in this phase of the conversation? The pound's still around that 130 level.
I think that we've been here before, as in it's been on and off for so long. But indeed, so long as we're hopeful that the deal will come, the pound will continue to appreciate. We think that ultimately we could get to 133, 134, or indeed the height of the year in the case of cable, potentially a bit lower in the case of euro sterling. That should be your target if you're buying the pound. In the interim, as we are awaiting more details, and we have to really just follow the story, the Brexit negotiation story unfolding, the pound will likely remain on dips. So I guess what I'm trying to say is that very near term, depending on the news flow, the pound could extend its gains, but could very much actually cede some ground, especially if no compromise is obvious. But ultimately, the view is still that the deal will come essentially by mid-November, so that it can be ratified by the UK and the EU parliaments before year-end, and that should give the pound that push towards the height of the year against the euro and the dollar.
Is your assumption, Valentin, a bare bones, a skinny deal between the two? And if we don't get that, where does the pound fall to?
Yes, that's still our assumption, though I have to say that what took me by surprise was the persistence of the difference, especially on topics like fisheries, and I believe that may shift the balance of risk in favor of even less bare bones, in the sense of a partial trade deal, where most of the key issues regarding trading goods are being sorted out, but some, more namely really fisheries, may be left to be sorted out for later on, as in 2021. The pound's reaction, I think there may be a scope for initial disappointment. However, I think that with most of the issues dealt with, and I believe that's the ultimate outcome, there will be a sense of finality to the whole Brexit drama, and indeed that will remove a huge layer of uncertainty hanging over the pound, and should be sufficient, I think, to boost the outlook for the currency, even though some of the additional, or indeed some aspects of the deal may have to be sorted out later on.
Valentin, what is the level of degrees of freedom that the United Kingdom has fiscally now? Do they have a lot of room to provide stimulus relative to the U.S. or to other European nations?
Well, it's a relatively much smaller economy. Let's be clear about it. So that the liquidity premium that really economies like the U.S. or indeed the Eurozone are enjoying when they're trying to sell their debt to international investors is simply not there. And needless to say, as a result of that, the latest downgrade by Moody's of the UK credit outlook is not doing the UK Treasury any favors. So I think some form of fiscal discipline may be needed a bit sooner than in the case of the US or for that matter the Eurozone, but we are not there yet. At the moment, fairly weak global growth and low inflation makes really bond yields, essentially is pushing bond yields lower. So from that point of view, I don't think that the UK will be facing any difficulty selling its debt anytime soon. By implication, no fiscal discipline will be needed that soon. Down the road, definitely, however, I think that with as we grow out of the recession and indeed the global economy recovers and investors are seeing various opportunities, I guess the UK will have to do a bit more to attract foreign investors to its gilt markets.
Valentin, thank you so much. Greatly appreciated. Valentin Marinov with us with Credit Agricole. And Edwards, I just want to say this is just absolutely extraordinary. Again, to frame this, we have a breakout in yields in the United States. And I noticed that we did not really have a pop in European yields. They came in, Swiss 20-year came in a little bit. I mean, I'll take the point, but it's going to be amazing to see the five-year break-evens difference between Europe and the United States with all the stimulus
where this inflation. Yeah, where the inflation, exactly, where the inflation expectations go over that sort of medium-term horizon. We got inflation data out of the UK this morning, Tom, which showed a pickup, but still lacking momentum. It was actually to do with some of the stimulus the government had put in that had weighed down on inflation in the summer. But the conversation really here around debt levels, we heard a little bit of this from the minister earlier. A nice line for you I was taken by a few hours ago, Tom. The UK government net debt now at 103.5% of GDP. That is the most since 1960. I don't remember 1960.
What is this, the Nerd Patrol? You don't remember 1960s? Who led her on? Okay, give me Francine back. She's nicer. I mean, come on, Anna. This is such a nerd patrol. I can't believe it. But we're looking at really historic times. I mean, you look at the debt buildup, the fiscal gap,
yes,
the deficit, the trade deficit dynamics. It's extraordinary. Did she say 1960? Yes. She doesn't remember.
I did say 19. I apologize.
Megan, do something.
But what's really interesting in the conversations we're having with guests, though, this morning, Tom, is talking about when that debt level starts to matter to markets. Are we seeing some of that already with the pickup in yields that you've been talking about? Valentin Marinov used that term, it will matter down the road. And I heard that phraseology from another guest this morning. And it's just governments really want to understand how long that road is. When will it start to matter? When will these higher borrowing costs start to bite?
Well, it's going to be interesting to see. Futures -2, they were -7 earlier. That 10-year yield we're looking at in the U.S., 0.8108. This is fun. She is the most interesting person in tradable markets today. Adina Friedman runs the NASDAQ shop. Always an important interview. Look for that in the 9 o'clock hour. Stay with us. Markets on the move. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
This has so entangled itself into our social fabric and into our social status pipelines and into the development of children that even if you opt out, that's not enough.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. John McKay has been the CEO of Whole Foods Market for over 40 years. 3 years ago, he sold his company to Amazon for $13.4 billion and agreed to stay on. Now the question is, when will he leave? McKay spoke to us for the latest episode of The David Rubenstein Show.
I will leave Whole Foods sometime in the next few years. I haven't announced a retirement date yet. And COVID, COVID it's a crisis. So I'm dealing with the crisis here for that. And I always make this joke that it's like Whole Foods is my daughter. And I literally married my daughter off to the richest man in the world. And I just kind of came along to make sure the marriage settled in well. And I'm still here, but I know that the time will come eventually for me to leave. It's just not yet. And I'm not quite sure when it will be.
You can see that entire interview tonight on The David Rubenstein Show. That's at 9 p.m. New York time on Bloomberg TV. And that is your Bloomberg Business Flash. Tom, Anna.
Thanks, Ritika Gupta, there with your Business Flash. Quick look at the data. European equity markets under pressure this morning, down for a third day. You heard about it from Ritika there. Coming up in the latest episode of The David Rubenstein Show, peer-to-peer conversations. John McKay from Whole Foods. He will be giving further details on his plans for the future, perhaps. This is Bloomberg.
Gender-neutral language at the airport and on its flights. Instead of the greeting, ladies and gentlemen, the English announcements now use phrases like all passengers or good morning and good evening. There's no change to the Japanese version because we already use which is the honorific form of everybody, and that's already gender-neutral. JETA becomes the first Japanese airline to make the change as part of its greater initiative to tackle gender-based discrimination, following some other carriers. Air Canada and EasyJet started using gender-neutral greetings last year. Japan Airlines also ditched its mandatory high heels and skirts rule for female flight attendants earlier this year after the Kutu movement went viral on social media. That was the nationwide campaign to fight the rule that some women must wear high heels at work. So JETA now allows female flight attendants to wear trousers and flats if they want. Activists here have been pushing for change, fighting against entrenched gender traditions. The Japanese government does not legally recognize same-sex partnerships, although a growing number of cities have started to. So this change towards gender-neutral language could be a symbolic step for inclusivity in Japan.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We need support for the economy, both for monetary and fiscal policy. And monetary policy has already done a huge amount. Fiscal policy response in the United States has been extremely impressive, but Actually, it's much larger, the fiscal support, than what was done after the 2008-9 financial crisis. But the fiscal support has now lapsed.
We need to focus on the role of market power in our economy, the low wages, the fact that at the bottom wages are the same as they were 65 years ago, adjusted for inflation, and most importantly, we need the aggregate demand going up so that the economy, so that their jobs are there for all Americans. And that won't happen if we don't have that fiscal stimulus that Janet was talking about yesterday.
No, it is not a job. Back-to-back days talking to Chair Yellen and then to the laureate Joseph Stiglitz. I'll tell you, folks, it's a great privilege. We throw a hat trick right now. That's hockey talk, Anna, by speaking after Yellen, after Stiglitz, to Hugh Van Steenis with UBS, of course, his service to Governor Carney and now advising the Union Bank of Switzerland. Hugh, wonderful to have you with us today. On central banking, I just want to cut to the chase. How's Lagarde doing?
Look, thanks for having me, Tom. I think at the moment the policy is continuing very much in the old vein, so I think it's sort of business as usual. I think we're all fascinated to see what will come out of this strategic review. We know it's going to be more green, we know it's going to be more digital, but what we don't yet know is what's going to happen to interest rates. And I think the challenge for me is going ever more negative here is likely to do more harm than good. And I think I was very struck that the president recently said in her speech that she recognized herself the risk of going more negative would start to damage the economy. So I think that, the market is worried about the impact of negative rates. But on the other hand, the market's penciling in negative rates till Q4 2029. We've got a decade of this stuff.
Right.
And look, we've already been talking about negative rates since 2016. I have to say, I'm sorry, Tom, it's another decade for us.
Hugh, with this changing of the guard at UBS, I know it's inappropriate of you to speak of executive actions at UBS and frankly at other banks as well. But I want to talk to you, and this, we've talked to Davos about this many times. I want to talk to you about the level of impatience across continental banking, not to be more American-like, but to get it going on profit. Is that unthinkable given the negative interest rate structure?
Look, I think it's a great question. Look, if I just put UBS to one side, obviously we had our results yesterday. Profits were, the third quarter profits were the best for a decade.
Yeah.
Profits
You
up
sound
40%.
like, come on, you sound
blah,
like
blah, blah, blah.
Sergio.
Speaks for itself. Exactly. Well, you had him on, so he can say that. But I think, but if you look at obviously Switzerland and the US allowing banks to pay dividends, that Europe's not. And I think that what I sense is there's a growing pivot amongst policymakers who are worried about the low equity prices. The implied cost of equity for the Eurozone banking system is about 15%. There are very few loans in this current environment which are going to make you 15%. And so I sense the policymakers are getting more anxious about who is going to fund the recovery as the government support for guaranteed loans expires. And I think as you look at the European banks, the negative rate environment is tough. The build-up of deposits over loans is really tough, and the lack of scale. Now, look, I think that one thing I feel strongly is the pandemic is accelerating the winner-takes-most characteristic. Now, it's not just the US firms. Look, UBS, we got 3.8 trillion of client assets across asset and wealth management. So again, put UBS to one side. But the challenge for some European banks is if there is this winner-takes-most dynamic accelerating into a digital acceleration, how will they respond? And I think that really is a question you should be asking every CEO on your show.
Yeah, Hugh, good morning to you. Winner takes most dynamic and the need for scale sounds like an argument for M&A. Is that the story of 2021, do you think, for European banking?
But I think it's going to be a couple of things. I think they're going to be looking for scale, but in ingenious ways. So, M&A, like we're seeing in Spain, like we're seeing in Italy, in-market M&A is clearly one solution for that. And you've heard the ECB comment on this. The other is, do you just accept you outsource your back office to one of the tech giants? and I've counted at least 31 firms outsourcing their back office, or sorry, they're moving onto the cloud. So another way to get scale is actually teaming up with the big techs. So I think a really interesting theme will be how many European firms just go all in on cloud and then accept that they can't invest in enough technology. Now, there are a handful of mega caps or very large firms in Europe who I think can, but I think for the average European bank, that quest for scale is going to be really important, Anna.
How much of big banking can big tech do? Which bits of the chain then, Hugh?
Oh, well, look, cloud, it's very clear that they can host. Software as a service, they can you can buy in off-the-shelf packages. Obviously, the payment rails. If you look at who's supporting the growing number of even the payment giants and the banks, that's an area where I'm seeing it's almost like the Lego blocks are being readjusted. There's a reconstruction of financial services. I was at the World Economic Forum kickoff of the new Financial Council last week, and this sort of reconstruction of the financial system and a greater sort of symbiosis between big tech and financials was one of the really big themes that people wanted to investigate this year.
But will that affect, will we get a traditional commercial banking embracing digital in the first world? It's happened in other nations. You and I did a panel on that 1 million years ago at Davos. The first world's still behind, Hugh, on tech embrace. Will they?
I think the customers are speaking. So across financial services, I see a great acceleration in the digital agenda. Take one example, the use of digital payments has probably fast-forwarded 2 to 5 years. There's some great data from Square and Stripe and Visa showing these trends working there through across payments. And as clients, as we're working from home, let's hope it's only 1 more year, but maybe it's 2 years. That focus on needing to go all in on digital payments, I think, is accelerating.
Hugh, it can't be 2 more years, because I see that piano behind you where you are forcing children to practice their piano. That is child abuse.
Look, they love it, Tom, but I agree. As we were chatting before, we'd much rather be out there competing in sports.
See that, Anna?
Well, let's hope we all get back to the piano and the sports soon. Hugh, thank you very much. Stay with us. Hugh Van Steenis, UBS Senior Advisor to CEO at UBS and former Senior Advisor to Bank of England Governor Mark Carney. More from Hugh shortly. Let's get a Bloomberg First Word News update. Here's Ritika Gupta.
Thanks, Anna. Senate Republican leader Mitch McConnell may stand in the way of getting a new stimulus package before Election Day. Bloomberg's learned that McConnell has warned the White House not to rush into an agreement, and he hasn't committed to taking a vote. House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin are moving closer to a deal. Pelosi says she's hopeful for an agreement this week. The coronavirus pandemic is quietly gathering force in a region that has already suffered greatly. Southern states in the U.S. By absolute numbers, the region remains the national center of the pandemic. More people are hospitalized with COVID-19 across the South than in any other part of the U.S. Kentucky just hit record hospitalizations. West Virginia and Oklahoma did so on Friday. And a new report on President Trump's taxes reveals details about his activities in China. According to the New York Times, that includes a previously unknown bank account. The paper says the president spent a decade unsuccessfully pursuing projects in China and had an office there. The president and his allies have denounced Joe Biden for being soft on China and point to his son's business dealings there. And it's an echo of the Cold War. The Western world's premier spy alliance has found a new focus with the rise of China and President Xi Jinping. The Five Eyes network is made up of the US, UK, Canada, Australia and New Zealand. It's seeking better intelligence on everything from the coronavirus to child trafficking, and other nations now want to join in. Global news, 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom, Anna.
Ritika, thank you so much. It is a debate in Nashville, and it is at Belmont University, where their huge music heritage. No surprise there, given Music City, and it will be a debate. Kevin Cirilli will be in attendance. It will be original. Look for our debate coverage tomorrow night, this beginning at 8:30. Stay with us with Hugh Van Steenis. Markets on the move, yields higher, dollar weaker. This is Bloomberg. Bloomberg Surveillance. Good morning, everyone. Anna Edwards in for Francine Lacroix. I'm Tom Keene in New York, and we are looking at markets on the move. Yields are higher, and of course, that is the whispers of inflation out there. With us, Hugh Van Steenis. He is with UBS as a senior advisor to Mr. Armati. Of course, the changing of the guard at UBS. He was a senior advisor to the Bank of England's Governor, Mark Carney, as well. Hugh, I got 8 ways to go here. But I think I really want to talk about what Janet Yellen talked about the other day with a group of 30, with Jacob Frenkel's leadership, the idea of finally figuring out how to price climate change. I would submit that auction theory across the continent has been a failure. Janet Yellen is adamant about a tax on carbon. Can we affect that?
Look, I think this topic is something I spent a lot of time on, and as you know, was involved in the thinking around the climate stress tests for Governor Carney and the bank. I think the first best would be to find a carbon tax. Obviously, it's tough to then work through exactly what the right price is. Will we get agreement across different nations? And so far, at least, carbon taxes have proven to be just very local, you know, like carbon taxes in city centres. If we don't get the first best, then at least we can ensure that the financial system is aware of the risks. And I think what was in the G30 report, which we at UBS also contributed to through Axel was we need better reporting, and it's fantastic. There's now 1,000 firms who've agreed to report on a task force for financial disclosures basis. We need embedding risk management, so that there's now 15 central banks who's copied Governor Carney in wanting to stress test the system. And then probably more importantly, something that you and Anna have talked about all year, this year has been the worst year for the energy markets for 70 years. Clean energy stocks are a tiny proportion of the market cap. They're up 83% to last night. and big oil's down 51, 52. That ripping apart, I find when I engage with the CIOs of big fixed income shops, they're now reappraising their portfolios because they just, what they thought were theoretical constructs of climate change 10, 15, 20 years out now become cancelled projects in the next 5 years. So I actually think the financial world is really pivoting around this, but I'm not sure, but they're not waiting for a carbon tax.
I agree that we can't affect it without a global reach. So within a global reach, and let's say if we get a President Biden, we get a reaffirmation of the Paris Accord, how do you finally develop a global agreement on climate change? I don't see that mechanism there. Where is it?
So look, I've been focusing probably more on how the financial system can play a role in this. So one example, I think you had Bill Winters on last week. I'm part of the Bills committee trying to think through, can we create a voluntary offset or carbon offset market where people can trade permits? And look, we all need to be thinking through not just 10, 20, 30 years out, but what are we going to do in the next 5 to 8 years? And so actually thinking through a voluntary carbon market is one lever. Obviously, planting trees is another. I think what I'm hearing, and it came up a lot in the meetings, the virtual meetings in Washington last week, was the voluntary actions of financial firms and actually, quite frankly, asset managers. I mean, one thing to flag, one of the biggest sources of growth across UBS this year has been the climate-aware strategy in our asset management division. If I look in the public market, the single fastest category of funds growing has been climate-aware funds, growing about 62% annualized this year. So there's also money chasing, and the more that asset owners or investors are asking tough questions, that'll work through. But look, as you said, the best way is a tax, but failing that, the financial system is adapting, and actually quite fast.
The financial system is adapting, Hugh, as you say, and you've mentioned the TCFD disclosures. What about the range of data that is out there? There is so much. I mean, Bloomberg provides certainly measures on ESG factors, and there are other providers as well. Do you think the market has the definitive data that it needs to really assess businesses around climate?
Look, I think it's glass half full. So I think increasingly the TCFD is turning into the gold standard. And obviously that's something that when I was working for the Governor Carney, we looked to mainstream this. And of course, he's now looking for it to be mandatory. I'm sure you saw a couple of weeks ago, New Zealand became the first country in the world to mandate this. But voluntarily, as I said, over 1,000 firms are doing it, are volunteering to do it. But I think that it depends on what the question is. If you're an investor just asking, is a firm working towards sensible targets? What are the risks? TCFD does a good job. If you're the CEO or CFO or the board, you then need to go much deeper and really understand what the risks are. And that's where the additional tools, whether it's Bloomberg's and others, I think can play a really important role. But having a clear, consistent, comparable standard, which is preferably put into the annual report, I think is something which we're all hoping we'll get to in the next couple of years.
Hugh, thanks very much. Thanks for your time this morning. Hugh Van Steenis, UBS Senior Advisor to the CEO and former Senior Advisor to Bank of England Governor Mark Carney. Coming up later today, PJ Solomon, CEO Mark Cooper. That's at 10 a.m. in New York, 3 p.m. in London. This is Bloomberg.
see coming. Some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. U.S. inspectors have found more quality control problems at an Eli Lilly plant making a coronavirus drug. That could keep the company from meeting its goal of producing 1 million doses by the end of the year. The factory is in Braggburg, New Jersey. Lilly says it has been working closely with the FDA. Another in a series of mergers that's reshaping the struggling U.S. shale oil industry. Pioneer Natural Resources has agreed to buy Parsley Energy for $4.5 billion in stock. That will create one of the biggest producers in the Permian Basin in West Texas and New Mexico. General Motors has unveiled its much-anticipated battery-powered Hummer. The truck, based on a military vehicle, will have a starting price of $80,000 and a range of 350 miles. Production will start in the fall of 2021. We spoke to GM President Mark Royce.
We'll see as we announce the different markets, but just keep in mind it is designed and engineered and made to be a global vehicle.
And that's your Bloomberg Business Flash. Anna, Tom.
Ritika, thanks so much. Greatly appreciate it. Again, markets on the move. We'll do much more of this throughout the morning. She is a gentle lady from Smith College of Northampton, Massachusetts. Saida Zahidi is with the World Economic Forum, has really carved out an interesting space thinking about how we work. Then a pandemic happened. Let's listen to Sadia with Francine Lacroix.
Pre-2020 would have been that we have somewhere between 5 to 10 years to get this right. I wouldn't try to guess what exactly that number is today, how many years, but it certainly got a lot shorter, and we need to ensure that there is a sense of urgency today. Now, as to how that will happen and what that would look like, the good news is that it's not just technical skills that we need. It is also a number of those very human skills that you've just mentioned that actually rise to the very top. For most workers, it's about acquiring that experience on the job, working in teams, working with others, and less so about formal retraining. However, there is a very large subset that also has to be delivered through formal retraining, and we tried to find what is the time to reskill. And in many cases, even if you want to reskill into a job related to AI or data analysis, we're talking about a few months. And so it is actually achievable.
Post-pandemic, are people going to go back to the office, or are we going to see this working from home or hybrid continue for many years?
Well, the report is a summary of the views of those people that are at the front lines of making these decisions. And let's just say that the very large majority are thinking that this kind of a hybrid workforce is here to stay for some time to come. They're changing how they're investing in their physical workplaces. They're spending much more time investing in what might be digital collaboration tools. And many are starting to recognize that the sort of the social fabric at the workplace does start to pull apart after some time of working in this way. And they're starting to invest in new tools that create a sense of community, even digitally. So I think the prediction for most people, most of the heads of HR and strategy that are responding to us, for them, this is here to stay for some time for the white-collar workforce.
I was going to ask you, do they worry more about connection amongst employees or the sense of community in a company, or do they worry more about productivity?
There's a mix, and what's interesting is that you actually need that sense of community and some of that connectivity between workers to enhance productivity as well. This is not just about providing the best technology, but it's also about that element of human interaction that makes things tick, that makes people come up with the best creative ideas, and so those two things are actually intimately linked.
Saidi Zahidi of the World Economic Forum as well. We've got much more coming up, and we're doing this against a backdrop of markets on the move. Let me review this for you. Yes, stimulus in the air. Yes, inflation break-evens in the United States ebb up higher and have now really broken out back many months. The result of this is a 10-year yield 0.83%. High for the day right now, 0.81%. The 30-year bond, 1.62%. As we heard from Valentin Marinov, he's watching curve steepening. We see that with a vengeance out to 66 basis points. None of this is huge, but it puts us at all sorts of tension points within the global system, including a weaker dollar, and we see that right on support right now. DXY 92.80, pound sterling 130.57, euro dollar advancing 118.45. Coming up with Merrill Lynch, we'll touch on the markets with Christopher Hazy. This is Bloomberg. Good morning.
From New York and London for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance Live. On Bloomberg TV, alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Francine Lacqua is away today. This Wednesday morning, it is about the price action, Tom Keene, and a 10-year yield north of 80 basis points.
Markets on the move. We'll get to the Brexit headline in a moment. John, Brexit is so important and different from what it was yesterday or a week ago, but the bond market is different. I mean, real simple, John, have we broken through key levels here with a 10-year yield 0.81%? That's the theme for today.
The high the first week of June, Lisa Abramowitz, about 96 basis points. Some distance away from that still, but it's the move. And off the back of what? The talks, the deadline that apparently is not a deadline. Did I get that right, Lisa? A deadline is not a deadline anymore?
What does a deadline mean anymore? Honestly, though, I will say we kind of were skeptical about it yesterday, and certainly today. We're still talking about talks about stimulus. So we can continue talking about that until the election. When you say off of what, though, there seems to be a growing consensus in markets that there will be a blue wave, there will be more fiscal support passed by a Democrat-led Senate, and that this will be bad for Treasury yields higher. You raised a really good point, John, yesterday, which is, what is the argument here? That there aren't enough buyers for the supply, that the Fed isn't going to come in? What is the big sort of voice here that's driving yields higher? I think a lot of it comes down to the dollar, John.
Should we get to talks about talks, and then we can get to the currency market as well? Let's stick on talks about talks. This on Brexit, I promise you, we won't stay here for long. There are two negotiators involved, Barnier and Frost. This is the latest headline. The EU's Barnier spoke in a significant way, according to a UK spokesperson. They will talk again on Wednesday. I think this is my issue right now with these two discussions. Fiscal stimulus in the United States, Brexit. It's always about the mood of the talks and never about the substance of them, Tom. And I'm not sure for how long you can keep trading on the mood of a discussion between 2-3 different parties.
Long time.
There's a distinction here. The stimulus maybe now, but John, for certain, we're going to see some form of stimulus in the United States off the celebration of a Biden win or a second term for Mr. Trump. That debate tomorrow night in Nashville. John, I think you're pricing in better earnings as well. I just really want to watch earnings season, and when I see boring non-tech companies doing 4 or 5% revenue growth, that gets my attention as well.
And the exciting ones, Netflix, not delivering in a big way. We'll talk about that later in the hour. Let's get to the price action of this morning. Or shall we take a mookie at someone else's bets?
Ooh.
Do you like that? That is a subtle inside.
Really subtle.
Tom Keene. S&P 500 futures up a little more than 1/10%. Everyone outside the United States are like, what is he talking about? In foreign exchange, euro dollar 118.50. We appreciate 1/4%. Weaker dollar through G10. That's the theme this morning. Cable, sterling outperforming 130.60. There's the move in bonds, Tom. 81 basis points on a 10-year.
We will talk about the geometry of the great game, John, at another time. We've got to get to our important guests. And seriously, folks, markets really most interesting today. All I can tell you, John, and we'll do this later, is stealing from second to third base is totally different than stealing from first to second. We'll discuss that later.
I thought we weren't doing baseball. I thought you were going to get to Chris Heisey. You want to talk about baseball?
Well, I will. Why don't you bring in Bring in Mr. Heisey right now. We'll save the baseball for later.
Chris Heisey joins us now on the phone. Maryland Bank of America Private Bank Chief Investment Officer. Tom can't wait to talk about this. Chris, great to catch up, sir. The breakup in 10-year treasuries, the yield, the move higher, really subtle. Just a couple of basis points, Chris. How important is this move for you?
Well, John, Tom, and Lisa, as a former baseball player, I can actually tell you stealing second is very different than stealing third. And stealing third is what we're trying to all do right now as it relates to all the volatility that's about to come in the markets. If you really think about what you all started the program with, substance is absolutely key. It usually is, but even more at this point. Now, the breakout in yields is telling us two things. Copper hitting a new high yesterday. That's number one. Housing is powering ahead. That's number two. And it's early in the cycle for housing, particularly in the States. And then number three, Lisa mentioned this before, is the correction in the dollar versus a very strong weakness in the dollar or strengthening. It's just a correction from the overly strong dollar that we saw in the past few years. And last but not least, this is telling us with a megaphone that a cyclical move overall in the markets is afoot. We had a few of those head fakes during the year, but for sure, from our perspective, over the next 12 months, it's the cyclicals that are getting up off the ground and looking to power this market ahead.
Okay, so you are seeing rotation, and is it a rotation on an absolute basis, tech weaker, others better, or is it a rotation that's a relative basis where tech still performs?
Because there's still a lot of nervousness in the market, and we still have a lot of things that are very unclear, particularly, number one, the potential third wave with the virus. It seems to be that tech and healthcare and some of the areas that powered through the pandemic will be a source of funds. They won't be the only source of funds, but as investors still stay nervous, they can't take all of their cash that has been built up, and we still estimate that there's over $4 trillion in cash on the sidelines, and put it to work. So they're going to move some money in to buy those areas that did not perform, and then use some of the profits, particularly if there's worries over capital gains taxes going up next year, just before the end of this year. So they do the dual method, Tom, where they use a little bit of their gains from the areas that performed well, use some cash, but it's not a huge move into the market. It's more of a back and fill seesaw type of environment.
Chris, I'm not convinced that all the moves that we're seeing really speak to a reflation trade where you see inflation expectations tick up dramatically. If you take a look at what's underpinning this move in yields, it really is an increase in the real yield of 10-year treasuries. The idea that the premium that investors are demanding to own treasuries is going up relative to inflation, possibly because of the bulk of treasuries that the U.S. is going to sell. Also, there are supply disruptions in copper. How much is that the factor here, that supply will finally matter when it comes to treasuries?
Yeah, I think that's taken the front seat right now, at least here in the short term. Some of that has a lot to do with the fact that central bank activity seems to be signaling that there's a little bit more backing or hedging going on in the gold market relative to treasuries through central bank reserve activity. So some of it also is the fact of what you just mentioned, which is if my treasuries are not going to give me the income that I'm looking for, relatively speaking, then I'm going to pull out. I'm going to go down the curve a little bit and wait out this volatility. And that creates less demand with increasing supply, which puts a little bit of pressure upward on the back end.
Chris, you mentioned copper. Let's talk about copper, and let's talk about dollar China as well. Dollar yuan, we haven't seen it this low, the Chinese currency this strong going back to the summer of 2018. Copper, we haven't seen it this high in London since the summer of 2018. Chris, how much of what we're seeing at the moment is a China story, a China bias emerging?
Yeah, clearly they're earlier in the cycle than the rest of the world. Going back to the second quarter, they started to outperform on a growth basis for obvious reasons. So you're seeing their manufacturing not be an inventory buildup cycle. It's actually real demand matching the inventories that they've built up. And that's starting to transition later on over in the fourth quarter and first quarter into Europe and in the United States. So on a relative basis, they're earlier in the cycle, and that's forcing a strengthening of the yuan. But more importantly, it shows that the PMIs, the purchasing manager indices around the world, are strengthening, and it's not just a cyclical small 6-month window here. This is something that is very strong and powerful and has a lot of momentum, and that's where the substance comes in. It's not just the U.S. consumer. It's global manufacturing, and it's the U.S. consumer, and it's U.S. housing, and that's why copper is showing us the signs that it is.
So it's basically, this is a glass half full call, and that suggests that the ambiguous move in yields is a good ambiguity, that we're looking towards a better global economy.
Yeah, the biggest problem over the last decade, and you could argue even more so if you want to split the decade, the last 5 years, has been disinflationary forces, and some would say deflationary forces, high debt, a little bit of rising deficits, not leading to an overly strong break-even inflation move, dollar too strong, non-U.S. growth really pressured. All of that leads to disinflationary pressures. So any move opposite to that feels like reflation. One of the reasons why the Fed has been so active, and the Fed continues to be very active with forward guidance. So glass half full would be stimulus and liquidity mixed with reflationary tendencies, a correction in the dollar, better U.S. housing, stronger U.S. consumer in the next 12 months than what we've seen, and better PMIs around the world. To me, that means stronger growth and better profit cycle.
Chris Heisey, great to catch up, sir, of Merrill. And Bank of America Private Bank joining us on this market this Wednesday morning. Equity futures are just about positive now, up about a point, but it's the move through 80 basis points on a 10-year that gets your attention a little bit, Tom.
Yeah, absolutely, and it correlates across dollar as well. DXY breaching 93. That's that blended big country index, and Bloomberg Dollar Index nicely sitting on support. We really don't have a breakdown to weaker dollar, John, but it's something worth watching.
Got a breakdown in Netflix stock. That stock is down by almost 5% in early trading.
Yeah.
One for this market a little bit later at the opening bell. Coming up later on Bloomberg Markets, an exclusive conversation with Alan Greenspan, the former Federal Reserve Bank chairman. That's at 1 p.m. in New York, 6 p.m. in London. From New York and London, good morning to you all. This is Bloomberg Surveillance.
With the First Word News, I'm Ritika Gupta. House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin are moving closer to a deal on a new stimulus package. Pelosi hopes she can get an agreement this week. That's crucial to getting a bill passed by Election Day. One problem, Senate Republican leader Mitch McConnell is warning the White House against a Pelosi-led deal before November the 3rd. He hasn't committed to a pre-election vote. And President Donald Trump's campaign burned through almost half of its cash in September. The money shortfall comes at a time when the president remains behind Joe Biden in the polls. His campaign cut back on advertising in some key battleground states for a while. That Justice Department antitrust lawsuit against Google may just be the start of it. The case is expected to be followed by more state suits. The Justice Department action is the most significant antitrust case against an American company in 2 decades. Google's accused of a variety of anti-competitive practices. The company calls the government's case deeply flawed. British Prime Minister Boris Johnson will impose England's tightest coronavirus restrictions on Greater Manchester. Talks with local officials broke down and